Minute to go until the start of cash equity trading. I'm Francine Lacqua here in London with Danny Berger.
Francine, here are your top stories. Contagion risk. Hong Kong shares sink, fueling a global sell-off as investors weigh the debt crisis at China's Evergrande. Bond payment deadlines loom this week. Power crunch. Energy companies and the UK government hold a third day of crisis talks as the surge in natural gas and electricity prices threaten to put suppliers out of business. And it's election week in Germany. The final TV debate saw the CDU on the defensive as Angela Merkel is set to hit the campaign trail.
So, Danny, let's get straight to the futures, to the markets, and this is what we're seeing across the board. So, 15 seconds until European stocks actually start opening. The focus, of course, is on the Fed this week. A lot going on also in China, which could put some extra pressure maybe on the banks. Again, we don't quite know the read across for Evergrande. Then we look at gas prices and, of course, the U.S. debt ceiling and concerns about the agenda of Joe Biden. You can see futures, I think, are just stopping because we're seeing the real prices. And you have the market action, Danny.
I certainly do. Markets just opening up now. And Francine, you mentioned the risk of contagion for Evergrande. Well, we are seeing some of that so far. We only have the FTSE 100 open, down about 0.7%. I mean, in general, you can see a lot of these boards in the red, some of a stronger dollar given some of that concern of Evergrande, what it means for China. Let's get some more of these markets. France opening up now, the CAC 40 down 1.8%. In terms of China exposure, France is a large one. Of course, we have a lot of those luxury goods over there. So if you're going to be trading, where does China concerns get into when it comes to the European trading session? Look out for this index to continue to be the one that is underperforming. Certainly it is. We're seeing Spain down 1.5%. Now, a lot of arguments out there that Evergrande, it's not a Lehman moment, it's a Bear Stearns moment. There will be a bailout. It will be contained. But if you are a trader right now and you're looking at the holiday in Asia, there's not a lot of noise coming up. Your imagination can run wild. And if you're in Europe, it's continuing to do that. We are seeing continued indexes open lower. Italy down now 1.3%. Let's go ahead, though, and see where some of these sectors are shaping up so far this morning. Again, it is a down day for energy, down 1.5%. This has been a perennial problem for Europe over the past week. We have energy prices skyrocketing. It's about gas stockpiles not being high enough. It's about wind. What sort of impact will that have on industry? Goldman Sachs has been warning about blackout. We've seen fertilizer plants having to shut down. We've seen suppliers calling for a bailout from the government here in the UK. So that's leading us down. Banks leading us down as well, down 1.5%, and autos down about 0.7%. So certainly a day where people are deciding to take cash off the table. Now, looking at WM Go, Maps Markets Go on your terminal, it is again a very red day. Now, the degree of red is pretty much more than 1% for most of these markets. As I was saying before, the CAC 40 over here in France down 1.5%. So it's going to be some perhaps of these higher beta markets, but Francine, it's an ugly day out there, and a lot of that, again, having to do with the contagion fear coming from China.
Yeah, it is an ugly day, and actually we just don't know the ramification if something happens to Evergrande, and we don't exactly know also the authorities thinking on how to deal with it. So European equity markets opening a little bit on the lull side. I mean, I say lull, but actually they haven't quite decided what direction to go yet. It's also Fed week, and of course then we have the debt ceiling that we haven't even started on. So it's a big week for central banks. Wednesday's FOMC decision and expected to yield some clues on the taper timeline. Joining us now is David Zahn, Franklin Templeton, head of European fixed income. David, great to speak to you today. There is so much focus on a lot of the equities. I know you're on the other side, but it's taper. It's actually what's happening with the debt ceiling. It's what's happening in China. What happens if all things that could go wrong go wrong?
Well, we like to be longer-term investors, so we're not going to get too concerned about a little bit of wobble over a day or two. I think that the main theme this week is really about central banks. It's going to be about, does the Fed announce when they will discuss the taper? Will they announce the taper? We think that we'll probably start tapering later this year. And when you have the U.S. tapering into 2022, and you also have the ECB tapering into 2022, it does bring up this question of we've had this massive printing of money for several years now coming to an end. How is that going to impact markets? And I think that's one of the bigger areas that people need to be focused on.
So where do you then pin the balance of risk heading into this FOMC meeting, David? Is it about the dot plot? Could that be what shocks markets today?
Well, I think two things. One, it will be the dot plot, whether or not we see that there's more hikes in for 23, or if any are dragged forward into the end of 22, because that would really determine how quick the taper will have to be. But I think that the big one will really be Powell, and how does he try to massage the market with his statements after they've put out what they're going to do.
David, when you look at the sea of red right now in markets, and I know you're focused on European fixed income and maybe you're longer term, but what is the market actually worried about? What's going to be their main focus over the next 2-3 weeks?
Well, I think that we have several geopolitical issues, such as China, what is going on there. I think that could potentially have longer-term problems, but over the next couple of weeks, not that big of an issue. I think that the energy prices in Europe is actually something a lot of people are focused on, as we already have elevated inflation in Europe and in the UK and the US. And if we start to see that energy prices continue to go up, while that could be seen as a one-off, it will be on top of already elevated inflation, and it will start to bring up the question, is this inflation maybe a bit more durable than originally thought? And so then how do central banks react to that?
David, you mentioned China, this perhaps being a longer-term issue. How does that play out? What do you want to avoid if what we're seeing in China, given Evergrande and even the credit impulse, is a concern to you in that longer-term picture?
Well, I think China is a major player within the world, and we need to, and they are basically setting themselves up to not be exactly opposite the U.S., but there is a geopolitical tension there. And so I think everybody will be focused on what is happening in the financial markets in China. Is it slowing? They are one of the biggest, additives to growth. And so if they start to slow, global growth will slow. And we're coming out of this whole pandemic recovery. We want to ensure that growth maintains a steady pace. So I think it's really any insight of, is China slowing? Is this a problem for the global economy? And then what is the knock-on effect to other countries?
What happens with the debt ceiling, David? So this comes back in focus in the U.S. We had a very nice opinion piece by Janet Yellen, actually, in the Wall Street Journal, saying this could be, catastrophic economically. And then at the same time, so many questions, of course, about that $3.5 trillion Biden package. What does that mean for markets?
Well, I think that, we get the debt ceiling, we run into it on a, fairly regular basis, and they almost always come to a compromise and raise the debt ceiling. And I don't think anybody wants the U.S. government to stop functioning properly. So I think they will come to a compromise. We may have a couple weeks of volatility, but then the debt ceiling will be raised, and I expect then we'll see more stimulus coming out of Congress.
Yeah, certainly no one wants to see dysfunction. Everyone wants to see a functioning government.
Yeah.
David, then do you not really give any credence then to the argument of, let's say, Guggenheim Scott Minerd, who says the debt ceiling is enough to put the Fed on pause? Is there any credence to that?
I think if there was real disruption from the debt ceiling not being passed to actually raise it, then I think that could worry the Fed, because what is the knock-on effect? But I don't expect that really to happen. We tend to have these kind of standoffs, and then we get it pushed through. And the Fed, I think, is really looking at its longer term. It needs to start tapering. And one of the big areas I would focus on is we have this big fiscal impulse coming through, and this is a time actually for the Fed to start reducing its monetary stimulus at a time when the fiscal will take the offset. So I think that they will still remain on track, maybe a little bit slower, but overall, I think we'll be fine.
David, what's more attractive in the European fixed income space, especially if we start looking at ECB, starting to taper?
Yeah, well, our big focus in Europe has been to move away from the periphery, because if the ECB does taper, they have been big supporters of Italy, Spain, Greece, et cetera. And so we've been moving more back to the core. But also, I think that you need to look at credit, because I think that both investment grade and high yield, they have great fundamentals at the moment. You have strong growth, you have inflation. And as we know, in Europe, with inflation, that usually means that companies can pass through price increases, which will hit their top line and bottom line. So we are overweight credit out of the periphery and more in the core bonds for the short duration posture.
David, great to get some calls from you this morning. That's David Zane, Franklin Templeton, head of European Fixed Income. Thanks so much for joining us today. Now, coming up, we turn to Germany, where German lawmakers set to grill Chancellor candidate Olaf Scholz. That's over a fraud probe into his finance ministry. We're going to have the latest on the German elections. This is Bloomberg.
China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. Clearly China, huge in terms of the global commodity cycle.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early start to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
From New York City,
in London, in Sydney, in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Welcome back to the Open. We're 10 minutes into the European trading day, and you can see a lot of focus, of course, on, well, the lower side of the markets. All groups in the red. I'm looking at miners, biggest decliner. Iron ore, of course, slumping. Auto, consumer products slumping amid a sell-off also in luxury. We're waiting for the Fed a little bit later, and then after that, we're also waiting for news on Evergrande. China specialists trying to figure out exactly what will happen there. Now let's turn to the German elections, which take place on Sunday. Frontrunner Olaf Scholz confronts a potential stumbling block today when he faces a closed-door grilling from lawmakers over a probe into an anti-money laundering agency overseen by the finance ministry. Let's go straight to Bloomberg's Maria Tadeo in Berlin. Hi, Maria.
Hi, good morning, Francine. And we are joined now by Fabio De Masi, who is a member of the German parliament, but he's also a member of the Financial Affairs Committee at the Bundestag. And he's done a lot of work on this. So, I'm very happy to be speaking to him today. Fabio, when you look at this grilling that's going to happen today from Olaf Scholz, you've done a lot of work on this, and you yourself have called for more investigations to be done. How reliant or how trustworthy is this testimony from Olaf Scholz? Do you really expect to see any answers from him?
Well, I don't expect to see other answers than he has given in the past years, that he has created additional jobs at the Financial Intelligence Unit, which has to process basically all suspicion transaction reports from banks. But that's not enough. That's not enough because we clearly have a problem here, and it's becoming a big security issue also for the fourth largest economy in the world, which is Germany, because we're dealing with suspicious transaction reports on terrorist financing. Just to mention one example, we had the Wirecard scandal where a lot has not worked out properly. So it's a big problem for Mr. Scholz.
And you talk about Wirecard, you talk about COMEX, all of this happening not just under Scholz, but also a CDU government. But in particular, when it comes to Olaf Scholz, does this disqualify him from being chancellor? The fact that there's all this murky affairs around him?
Well, that's something that the electorate has to decide. The problem a little bit is in Germany right now that the other alternatives, the other candidates are also quite weak. So this is why Scholz has the time of his life right now. A huge proportion of the population doesn't trust any of the candidates at all. That's at least my impression. But, that's for other people to decide. I will certainly cast my vote as well. But what we really have to talk about is how to fix this problem. And I think there's a lot of finger pointing between CDU and SPD. But the CDU is also responsible for that situation because they moved the Financial Intelligence Unit, which is tasked with countering anti-money laundering, analyzing suspicious transaction reports. This organization has been removed from the federal police to customs by Mr. Schäuble, by CDU when he was still Minister of Finance. So they're both culprits in this, and now they have a big electoral show. So my focus is much more on how can we reform anti-money laundering laws in Germany? How can we enable the Financial Intelligence Unit to be something like a anti-money laundering FBI, a true police force as we have it in Italy, for example.
Right, and you have been very critical of both parties, I should note. But I do wonder, talk to me about the timing of this raid. There's many political commentators in Berlin that say today's grilling is not about getting answers, it's just about making Olaf Scholz look bad. The timing of this grilling is very funny. What do you make of it?
No, I mean, we have asked for this special committee session because it's obviously a very interesting situation if a ministry is raided, so we had no choice. And one has to say that this whole operation by the general attorney has been said that the general attorney that has requested this raid is a member of the CDU, which is correct. But there's also a neutral judge who has overlooked his application for this raid. And one has to be fair and say that before this raid happened, there were a lot of steps taken that have not been public. They asked, for example, for emails of the leadership of the Financial Intelligence Unit, which were not delivered repeatedly. And then they discovered that the Ministry of Justice had written to the Ministry of Finance whether this so-called risk-based approach in processing suspicion transaction reports has been contributing to actually not punishing certain criminal offenses anymore because they simply did not forward any more criminal offenses which had nothing to do in a more narrow sense with anti-money laundering.
But Fabio, I see, but I wonder ultimately, and this is a question, do you think German voters care? Because to me, it seems that, especially when it comes to Olaf Scholz, they do not say he's corrupt. What they say is that he's competent.
Well, as I said, I think the other candidates are very weak. So I don't think this will have a substantial impact on elections, but that's not my primary concern. My primary concern is whoever is leading Germany in the next years We cannot afford to be the fourth largest economy in the world, risking the integrity of our economy. We are a risk even to our international partners. And that's my primary concern. But, you know, all the other electoral games, other people can play them. I'm not running myself again for parliament, so I'm entirely focused on my job, on my homework.
And we appreciate your time. And Fabio, just before we let you leave, very quickly, if you were to say how likely is a red-red-green coalition likely to be from a scale of 0 to 10, what number would you give it?
I would give it probably a 5 right now, but if enough people vote for my party, then it can be a 10.
Well, Fabio De Masi, member of the Bundestag, thank you so much for joining us from beautiful Verona. I'm told I'm very jealous. Thanks for your time. We hope to see you very soon. Francine, Danny.
Maria, thanks so much. A little bit of campaigning there at the end. Gotta love it. That's Bloomberg's Maria Tadeo live for us in Berlin, keeping an eye on the German election story. Francine, let's take a look at what's moving elsewhere this morning. Certainly, we have that iron ore story being a large one. Anglo-American down today about 5.3%, but really the entirety of the energy space, of the miner space is down. You have iron ore falling below $100 a barrel. I mean, it's pretty dramatic, but it's really all about China. They want green skies for the Olympics.
You know what, Danny, I haven't had my espresso yet because I was kind of thinking, okay, the markets are going to settle and then at some point they'll maybe find a bid or something like that. But it's true that, you know, if you look at the FTSE and all of these very commodity-rich indices, they're on the lower side. All right, I have some green. You have the red, I have some green today.
Take the other side.
I'm the good cop. Lufthansa raising $2.5 billion to repay some state bailout funds. That story actually came out a short while ago. We understand that the airline group will also issue new shares at 3.58 euros a piece, and Lufthansa currently gaining some 3.7%.
Christy, now you're making me feel bad because I have to play bad cop again.
We'll switch tomorrow.
Okay, thank you. I was going to say, I have another decliner for us. It's Prudential, though I will say it's less of a macro story than my other one, down more than 5.5%. So they're raising up to about $3 billion in a Hong Kong share offer. Of course, if you look at what's happening in Hong Kong trading today, it's been just such an ugly day that not only does this dilute shares, but it's that Hong Kong exposure as well, Francina, which makes things very difficult here. Now, though, let's get to the Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Danny. Facebook's pushing back on reports that it was aware of the negative impact of its products. It says allegations made by the Wall Street Journal don't show the whole picture. Facebook says the issues of content moderation, mental health risks, and misinformation are complex and defy simple policy solutions. Several U.S. lawmakers have pledged to investigate the social network. U.S. transport regulators have urged Tesla to address safety concerns before expanding on autonomous driving features. Last week, CEO Elon Musk said drivers would soon be able to upgrade the full self-driving capability of their cars. However, the National Transportation Safety Board told the Wall Street Journal that the term full self-driving is misleading and basic safety issues must be fixed. And that's your Bloomberg Business Flash. Francine?
Thank you so much, Angel. Now, we're, of course, looking at the fallout in the markets. Coming up, contagion concerns. Hong Kong stocks slide as a fallout from Evergrande spreads. Danny and I will have the latest on this story. Of course, there's a deadline that's, looming. That's on Thursday. And so the credit market is not feeling too great about it. We talk China next. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Welcome back to the Open. We're 23 minutes into the European trading day, and you can see a sea of red. Or Danny Berger, also the queen of charts after Hillary left, trying to teach me a couple of things to look at in terms of credit. But it's very clear that there are three things weighing on investors' mind. Evergrande, so what happens in China, the Fed, what happens if they really start tapering, and then the debt ceiling in the U.S. and how that all plays into the economic agenda of President Biden. So Hong Kong real estate giants have suffered the biggest sell-off in more than a year as fear of contagion from Evergrande intensifies. That's as interest payment deadlines loom for the Chinese property developer. Well, joining us now is Bloomberg's China credit editor, Kevin Kingsbury. Kevin, a million questions, 20 seconds to actually get through it. I mean, first of all, is Thursday crunch because we could see some kind of real default coming from Evergrande?
Right, we have two different bonds that are coming due with interest payments, $86 million on a dollar bond and another $36 million on a local bond. They have not had interest payments in several months on bonds, and so far they have made every interest payment and met every bond maturity. So this, for whatever reason, there is not a payment made on Thursday. This would be the first time that Evergrande has not done this. So this would ratchet up the issue further. It comes on top of, obviously, the company giving different discounted properties to certain creditors for paying bills. So obviously there's a lot of cash that they're looking to save, and it appears, at least for now, that the cash may go to these bond payments, but until we see on Thursday, we'll just have to wait and get the final word.
Kevin, just very quickly here, a couple seconds. Francine was mentioning markets paying acute attention to this. Are contagion risks very present at this moment?
Oh, definitely. We've seen Asian high yield and Chinese high yield bonds both falling today, 1 to 2 cents on the dollar. Investment grade Chinese debt has also been falling rather notably today. So there is some broader movement out of not just property bonds, but also some of the other parts of the Chinese bond sector.
Right. All right. Kevin, thank you very much for staying on top of this. Bloomberg's China credit editor, Kevin Kingsbury. Francine, has been pretty remarkable. We were talking with Mark Cudmore earlier today, who basically said that, look, the chances of this spreading to Europe are slim, but you look at what these markets are doing, and certainly there still is a lot of red out there in Europe.
Yeah, I don't want to panic anyone, but it just reminds me of what happened with Lehman. I mean, we've learned, right, our lesson with Lehman, so I don't know, and one of the questions maybe we'll get Kevin back on is, okay, if PBOC and the Chinese authority decide to shore it up, how much do they have to spend? Is it 50 billion? Is it 100 billion? If they let it go under and, you know, let off some steam, we don't exactly know what it will touch at this point.
Yeah.
So it could be limited, or actually there could be, you know, some liability that we don't know of that could be systemic.
Yeah, that's such a good point. Just the unknowingness of that, certainly what's weighing on markets. Now, coming up, UK energy companies seeking bailout from the government. We're going to have more on that story next, and the surging gas prices. This is Bloomberg.
boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the Open, 30 minutes into the European trading day, and here are your top stories. Contagion risk, Hong Kong shares sink, fueling a global sell-off as investors weigh the debt crisis at China's Evergrande, while bond payment deadlines loom this week. Power crunch, energy companies and the UK government hold a third day of crisis talks as a surge in natural gas and electricity prices threatens to put suppliers out of business. And it's election week in Germany. The final TV debate saw the CDU on the defensive as Angela Merkel is set to hit the campaign trail. So we're looking at the markets. First of all, it's going to be a very busy week. We're not it's not a great start actually, Danny, because markets are down, and they're worried about China.
Yeah, I mean, look, we also have the Fed this week, but it's almost like it doesn't matter because I feel like usually on these type of weeks we say everyone's sitting on their hands, they're waiting, they're not making any moves, but this is not a market.
Yeah, they're selling.
Exactly. It is the opposite of sitting on your hands. So maybe the market gives us enough action versus the Fed.
Yeah, I mean, if you look at the Fed, so, I mean, I don't know whether there's repricing ahead of that, and then we have the debt ceiling because Congress is also coming back. I mean, there's just quite a lot going on.
Yeah, there certainly is. What does it mean for yields? Are the dot plots going to move? So many risks. How do you weigh them up? Well, certainly it's affecting markets so far this morning.
I know. I can't wait to see the groups that are losing the most. We had basic resources in there last
Yeah,
time.
we certainly did. Well, Francine, let me take you over there. Let me show you exactly what is on the move so far this morning. We're having a lot of these indexes move into the red. And on this board, I just first off the bat want to point out the DAX, Francine. It is down more than 2%. Those losses really accelerating as we've gotten through the open. Look, before the open, the futures board, it wasn't the most moving. So what you're kind of seeing here is those higher beta cyclical type names underperforming. You have the CAC down nearly 2%, FTSE outperforming just ever so slightly, down 1.2%, and Euro Stock 600 down 1%, more than 1.5%. Now, there was some hope that we could see a cyclical bounce, perhaps growth will pick up, but the fear is what's coming out of China. Is this a Lehman moment? We did see a note from Nordea this morning saying, no, it is not a Lehman moment. The authorities will come in and step and help this. Perhaps it's a Bear Stearns moment, but at the moment, if you're waiting for this very risky week, you're just not taking any chances here. You are taking money off the table. Let's go ahead and see what the sectors are doing so far this morning. Francine, you mentioned miners. Well, it's everything, but you are certainly right. It is basic resources. That's what's at the bottom here. It is down 3.5%. We saw iron ore plunge below $100 a barrel, down 9 consecutive days, its longest losing streak since July 2015. So that's where you're going to see the most pain. Where are you going to find protection in this market? It doesn't look to be equities, but if you want something that's doing a little bit better, at the top here, we have consumer goods, we have healthcare, and food, beverage, tobacco, utilities, real estate. These are kind of more of those defensive plays. So it is clear what the market is telling us today. This is a very textbook risk off. Francine, of course, it's not a European stock. It's not in these sectors. But I thought, just for you, I also wanted to point out that Bitcoin is also down today more than 4%. You can't even get protection in Bitcoin today.
I mean, what is this market, Danny? I love, one of my favorite things, actually, when I come in the newsroom, is waiting for Danny to debrief me on, like, crypto kittens and Bitcoin. So I'm so glad you got it in there. Danny Berger there with some of the wild moves that we're seeing on the markets. Now, Bill Gates has raised more than $1 billion in corporate funding for his breakthrough energy catalyst. It aims to accelerate the commercial viability of solutions to the climate crisis. Amongst those coming on board are Microsoft's Satya Nadella and BlackRock's Larry Fink. Well, Gates and Fink spoke to Bloomberg's Eric Schatzker.
It's very exciting that we've got 7 founding partners here for Catalyst. These are companies that care about climate and even beyond getting rid of their own emissions are helping to support the projects that will reduce the costs of making things like aviation fuel or hydrogen. And so it's not just their emissions that will be impacted here. As we take this over $1 billion in capital we already have, and that's just the start, and fund these projects, we're going to bring the cost down so that all companies and all countries will be able to participate in using green products. So I saw this as a key element. I first went to Satya Nadella. Then, seeing how out in front Larry's been on this issue, I went to him. And so the two of them encouraged me to get a group together. Now we've got 5 other companies who are leaders in this space announcing substantial commitments. So we start with over $1 billion to help fund the scale-up projects that will bring the cost down. And there's a lot of leverage here because there'll be government money, government tax credits, that will pull together dozens of these projects.
And you've got, if I understand it, in addition to Microsoft and BlackRock, you've got Bank of America, you've got General Motors, you've got BCG, ArcelorMittal, I may be missing one, American Airlines.
Now, those are the 7 founding partners who are going to help guide this effort. We do expect to bring in lots more companies. We have announced that Catalyst also is working with governments. The EU and the United States announced that they see this effort as very complementary. And so designing these projects well, which if government was doing it by itself, you wouldn't have the breadth of expertise you need. So our expertise, the company's expertise with the governments, are taking a lot of recovery money. Europe, has committed a lot of capital. The Congress is debating substantial money in the 2 different bills there that, if those go through, will allow this effort to go full speed.
Larry, you're one of the first people Bill approached in his effort to get this off the ground. What convinced you to support him and to support Catalyst?
We need to rapidly find ways of bringing down the green premium to move to a more sustainable world. At this moment, we're spending more time focusing on moving green world. And I just think if we don't find the new technologies very rapidly, it's going to be highly inflationary to get to a green world. And we're going to leave many parts of society behind. So it became very real to me that we needed to be focused on investing in new technologies very rapidly. And importantly, though, we needed to invest in new technologies that may not turn out good. We needed to be investing in new technologies at the very onset of these technologies. Some of them may work, and if they work, they're going to be probably enterprises and ideas and companies that maybe BlackRock could fund later on with our corporate money, with our client money. But at this time, it was very important for us in our position as an organization to put our capital to work through our foundation to really start accelerating the idea of science and technology coming forward to rapidly try to find solutions to move, as Bill said, to green biofuels, to green cement and green steel.
Bill Gates and Larry Fink there speaking exclusively to Bloomberg about the breakthrough energy catalyst. Now let's stay on energy, where UK firms seeking a massive government bailout. That's, of course, as the surge in gas and electricity is threatening suppliers. The government is set for a third day of emergency talks today after admitting small suppliers were under pressure. Joining us now, we have Will Kennedy, Bloomberg's executive editor for energy and commodities, and Eddie Vanderwalt from our Bloomberg MLive team. A dream panel here. Will, I want to start with you on where we currently stand. So we have smaller suppliers and some of the larger suppliers asking for a government bailout in the UK. Is that where we're headed?
Well, what's happening is that there are a lot of smaller firms that supply power and gas to millions of British homes. And right now the market's gone in a way where they are capped in how much they can charge those households by the government's price cap on domestic utility bills, but they're having to go into the market and pay gas prices, power prices in the wholesale market, which have tripled, quadrupled over the last few months. And that's an unsustainable situation. Some of these companies have gone bust already. The expectation is that several more will. Now, normally what happens is those customers gets transferred to one of the bigger suppliers who takes on those customers and puts them on their books. But right now, that's not an attractive proposition. Those companies do not want to take those unprofitable customers on. So they're asking the government, it's your problem, it's your price cap, find a way to supply power and gas to those customers, pay us to do it. So yes, that's where we are.
Yeah, it's a huge political, hot potato, as they say, the Anglo-Saxons say. Eddie, what does it mean for the markets further down the line?
Yeah, I mean, Will is absolutely right. A lot of these companies have taken on, risk more than they were not properly hedged in the market and are facing really big exposure here. Therefore, we've got this knock-on implication. But it's a little bit like the Evergrande situation in that we don't know if we see, one or two of the bigger ones fail, what the knock-on implications will be for the rest of the market. Where are the full exposures? Now, energy prices significantly higher than anyone had expected them at this point in time to be. And unless the weather really plays along, we could see a significant squeeze higher and energy prices pushing up further.
So that's kind of a lot from the company side, though, Will. I wonder if you're an everyday consumer, if you're a household, if this is something you also need to be concerned about, that you could be soon paying through the nose for these energy prices.
Well, in the UK, prices for many people are capped, and that decision has already been made. For people who are using that tariff, prices will rise just over 10% in October, and then they'll probably rise again in spring. So higher bills are coming, but we know what they are. In other places in Europe, for other types of supply, people who aren't using that cap, prices may rise faster. Importantly, businesses have no cap, and businesses are starting to see their energy costs soar. And I think one of the things that we need to be aware of is how that leaks into other parts of the economy. Paying more for food, paying more fertilizer prices are going through the roof because they use so much gas. That's going to feed into farmers' costs. So what we need to be looking for is the way that these higher energy prices, because the rises are spectacular, are going to leak into the wider economy and build inflationary pressures.
And at the same time, we've had reassurance, of course, from the UK government that no one will go under, or no one will be left without gas in their homes if someone were to go under. But if we talk about the broader markets, Eddie, could there be dip buying away? I mean, there's 2 or 3 news that's really putting investor angst at the forefront. Is that going to change?
Yeah, in wider markets, of course, we've seen these little pullbacks before. I mean, we're only down, 3-4% on the S&P from the high. So the drawdown isn't spectacular. And as you've pointed out at the beginning of the segment, is that, we are in a Fed week. We could see the Fed saying things to calm the markets. And the one thing that that policymakers at this moment do not want is a Lehman moment anywhere, because sentiment is already a lot more fragile at the beginning of this than it was at the start of, the 2008 fallout. So I think whether it is energy prices, whether it is Evergrande, it doesn't really matter. Policymakers will be very closely watching and will want to avoid any sort of spillover into the wider economy and just negative sentiment for investors.
Thank you so much. Will Kennedy there, Bloomberg's executive editor for energy and commodities, and our Eddie Vanderwalt from our Bloomberg MLive team. Now let's get straight to the Bloomberg First Word News with Angel Feliciano. Hi, Angel.
Hi, Francine. After several false starts, bankers are finally getting back to their desks in the city of London. At HSBC's Canary Wharf headquarters, traders, salespeople, and close support staff have been told they're expected to be at their workstations 5 days a week. Meanwhile, occupancy at Goldman Sachs is around half and continuing to rise. China's top regulators defended their multi-sector market crackdown to Wall Street executives, saying stricter rules were not aimed at tech or private companies. Bloomberg sources say CSRC Vice Chairman Fang Xinhai told business leaders recent actions were intended to reduce social anxiety in consumer-facing industries. We're told BlackRock's Larry Fink said Beijing must ensure consistency and transparency to build confidence. And it was a big night for streaming services at the Emmys. Netflix won the Best Drama Series award with The Crown, giving the company the top prize for the first time. Its series, The Queen's Gambit, took the Best Limited Series award, while with Apple TV Plus's Ted Lasso won Best Comedy. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Angel, thanks so much. Angel Feliciano there in London. Now, coming up, soaring property prices are forcing people all over the world to abandon all hope of owning a home. We've got the big take story next. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We're about 46 minutes into your European trading day, and it is a sickly looking day, to put it maybe mildly. You have the DAX there down nearly 2%, easing off some of those losses. You're down about 1.5% for the greater benchmark. But again, it is declines of more than 1% for all of these. Francine, I mean, it is pretty remarkable that really the negativity has been kicked off with Evergrande. I know you've been looking at some of the stats here with just how massive Evergrande is, and that's fueling these contagion fears.
I know. I spoke to Kevin after, he came on TV, and it was like $300 billion of liability. $300 billion. So if the authorities decide to come in, I mean, it's not going to be cheap.
Yeah.
But if you put this in context, so this is a key week for the markets. It's starting off pretty horribly as the kind of wall of worries keep on building up.
Yeah, and usually you get that dip buying. Eddie was just talking to us about it. You haven't seen it yet. S&P 500 breaching below the 50-day moving average. maybe this is not the week you want to buy the dip, given all those concerns that you're talking about.
Yeah, and I guess the concerns, if you break it down, it's a lot to do with the U.S. because of the Fed, and of course what we are or not hearing from the $3.5 trillion economic plan of Joe Biden, the debt ceiling, and then kind of looming over this Evergrande. I don't know whether we know more on before Thursday when there's that big liability that actually should come to fruition.
Right. Of course, it doesn't help that China's on a holiday right now. It kind of just lets people's imaginations run wild because they're not hearing from anyone.
Yeah, so we'll keep on watching, of course, everything that's happening in China. I think Japan is also on a holiday. Now, soaring property prices forcing people in Germany and all over the world to abandon all hope of owning a home. Politicians are throwing all sorts of ideas at the problem, but there's little evidence of an easy or sustainable fix. Well, Bloomberg's Alan Crawford has the story, and he joins us now. Alan, this is our big take. It's a great story. I know it's taken like a lot of months of reporting and looking into the various countries and metropolises. How bad, first of all, is the phenomenon around the world?
Well, just to give you a flavour, Francine, in Shenzhen, which is China's answer to Silicon Valley, then the price of an apartment is 43.5 times the average worker's salary. Equally, in the US, we've seen property price increases of more than 10% right across the board. This is not just the hotspots of San Francisco or New York, right across the country in the first quarter. So that it's a phenomenon it's global, and it's affecting governments, both democratic and not so democratic.
Of course, there's a political element to this. You mentioned Berlin and Germany in your work here, and of course they're heading into election. What have the political responses been to this issue?
Well, governments are faced with different aspects of this because rents are also rising in many of the big cities. In Berlin, the city government, just on Friday here, it bought 15,000 apartments to try and alleviate the strains. We've seen demonstrations on the streets here, and in fact, there's a referendum, a local city referendum on seizing control of properties from private landlords. It's that serious here.
Alan, thanks so much. A fascinating story. That's Bloomberg's Alan Crawford. And highly encourage you, go to the terminal, read the full big take, or you can also check it out on Bloomberg.com. Now, coming up, European stocks plunge at the start of a week filled with risks. As Francine and I have been discussing, you have falling commodity prices, you have the FOMC meeting coming in a few days. We'll discuss exactly what you need to be aware of for your trading calendar next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are less than an hour into your European trading day. Not a pretty day to start out your week. We're seeing most markets down more than 1.3%. The worst of them so far is France, down more than 2%. All of it is about this risk that's creeping into the market. Francine, you've done a great job laying this out, be it the Fed, be it the other central banks, be it China. But I also want to draw to your attention the GMM. Today is the perfect day to type those 3 letters and go into your terminal. GMM. Go. It is a sea of red, be it your equity indexes, be Forex falling against the dollar. But Francine, if you look at that 4th column, a lot of stress in iron ore, but if you want to find the green, it's a natural gas. It's that energy story. Unfortunately, a negative story, but it's giving us some green at least.
Yeah, I know, but you're like, wait, I need to pay for my rent, I need to pay for the gas, and actually it's a real political problem here in the UK. Now, joining us to talk about these markets, Noor Al-Ali from our Markets Live team. Noor, I think the concern is that we're so used to dip buying that actually a lot of the sell-off hasn't been very long-lived for the summer months. What exactly is going on here? So if you're an investor, what do you worry about Monday, September 20th? Is it Fed? Is it Evergrande? Is it something else?
If I'm a trader today, I'm worried about policymakers, and that's exactly what ties everything in together. Whether it's a lack of intervention from policymakers when it comes to aid to Evergrande in China, or the question of the tapering timeline and what happens when the Fed comes into session later this week. Either way, I mean, even if you look at the iron ore as well, that's China as well also stepping in, and where you saw that contingent in Australia and later in Brazil as well, because that's one of the biggest producers as well.
Yeah, let's take on that iron ore. It has been pretty remarkable to see how much it's been falling. So you mentioned Australia, you mentioned Brazil. So what are kind of the big pain points that we'll see come from the commodity damage we're witnessing?
Yeah, absolutely. I mean, if you compare iron ore's journey this year compared to the Bloomberg Commodity Index, you'll see that the Bloomberg Commodity Index is still up about 26% year to date, whereas iron ore has really struggled because of Chinese intervention. But here's the thing, China is also trying to intervene in the crude markets as well. Whether or not that impact is going to be seen through is up to the auction and what happens later this week when they do sell off some of their reserves. But their reserves are understandably or notoriously less than what you would expect to have an impact on oil when it versus, for instance, OPEC. So.
Noor, we also had this Wall Street Journal opinion piece, right, by Janet Yellen, who basically calls for Congress to raise or suspend the U.S. debt ceiling or risk what she calls widespread economic catastrophe. Is the market discounting this at the moment?
You know, I would tell you very much so, but in a case where, you know, she wrote an op-ed, like, which is very much a concerning point. And if you were reading the markets and the news over the weekend, you're going to come in this weekend with a complete risk-off mode, and you're going to just want to sell off, and you're going to look at things for haven trades, and that's why we're seeing the dollar really soaring today and commodities falling off. And you mentioned, for instance, as well, France, for instance, equities falling. Well, that's luxury stocks for you as well. So that's the picture here that people are taking from there. When it comes to the debt ceiling in the U.S., well, it's up to the Congress, and so far they have been meeting their targets. Whether or not a bipartisan approval is met there is very much, I think, in the books there.
Noor, thank you so much. Of course, luxury. I mean, we saw price rises at LVMH and Kering, so it's amazing to see how that will actually also maybe demand in the future. Noor Al-Ali there from our Markets Live team. That's it for the European Market Open Surveillance Early Edition. Next. at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crisis poses an existential threat, there is a silver lining. The climate crisis also presents real and incredible economic opportunities to create jobs.
If government was doing it by itself, you wouldn't have the breadth of expertise you need.
It is essential that the relations between China and the United States become functional.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Evergrande's moment of truth arrives. Bond payments deadlines loom this week. Concerns about the embattled developer's fate and spilling into China's financial markets. Olaf Scholz wins the third and final TV debate. The SPD frontrunner faces a closed-door grilling from lawmakers about this month's raid at his finance ministry. Only 6 days to go until the German election. And the Arc de Triomphe is draped down in giant sheets of plastic in tribute to a late artist's unfulfilled dream. This hour, we speak to the man who oversaw it, Christo's nephew, Vladimir Yavkachev. So first thing is first, so let's check in on the markets, and there's definitely a sea of red across the board. Now, this is for a couple of reasons. First of all, the European stocks down some 1.8%. Chinese stocks are closed today because of a holiday. The focus is on Evergrande, the fact that actually there's a liability looming on Thursday, that we could see some bonds having to be refinanced, and it's unclear what the authorities want to do. It's also unclear if they do decide to let some steam off in the economy with Evergrande. It's unclear the repercussions that entails. The DAX down some 2.1%. It's basic resources that are under a lot of pressure, luxury stocks as well. And you can see iron ore 92.50. Now that goes back, of course, to the story we saw in China. If we look at the individual map and look at example for what's happening in the FTSE compared what's happening in the MIB FTSE over in Italy, the CAC 40, one of the biggest losers, down some 2.3%. This is because of the luxury stocks that are also under severe pressure. And then you can see the DAX down some 2%. Now, it is a big week for the markets. Let's look at the groups, but there is the Fed. That will give an indication of taper or not. There's a debt ceiling in the U.S., which is putting also extra pressure. And then, of course, we have Evergrande and exactly the decision that will come from PBOC. So there's a lot of central bank and policymakers coming out. You can see basic resources, banks, insurance, all down between 3 and 3.2%. So investors focusing on the risk of contagion from China's Evergrande, shares of the property developer have already plunged to their lowest since June 2010, with bond payment deadlines on Thursday a key test for the company. So let's bring in our China credit editor, Kevin Kinsbury in Hong Kong. So Kevin, where are things coming to a head now for the property developer?
Well, it's been a slow burn, really, for the last several months. There's been pressures building. The bond prices have plunged from roughly 80 to 90 cents on the dollar to anywhere between 15 and 25 cents. So it's been a really big decline in the last several months as folks have been worried about where the money was going to come ultimately for Evergrande to be able to make their bond payments.
So, Kevin, I was asking you actually how much liability, Evergrande have, and you were saying it's $300 billion. What are we expecting from these bond payments deadline this week?
Well, there's a 30-day grace period. So actually, even though the bond payments or the coupon payments are due on Thursday, there's 30 days before there's actually an event of default. So that's when we'll really be able to see. They have this 30 days to kind of get their act together to see where we're going to be and what ultimately is going to happen with being able to, whether they make the payments or whether there's some sort of state aid. It kind of gives even the government a little bit of time to be able to kind of craft how exactly is the Chinese government going to be able to deal with Evergrande. What do they want to do? Is there going to be any sort of harangue type bailout for Evergrande, or is there going to be some other kind of step that they take to kind of make sure that there's not this too big to fail that they want to really get to really keep it from going that way?
Kevin, thank you so much. Kevin Kingsbury there with the very latest on Evergrande. Now joining us is Agnes Belash, Chief European Strategist at Barings. Agnes, thank you so much for coming on a day where actually you see some of these, well, most European stocks really under pressure, with the CAC 40 down some 2.2%, basic resources down some 3%. What is the market worried about right now?
Good morning, Francine. Well, a number of things, of course. Where are we in this cycle, and where are we going to be with these emerging markets that are trembling on the horizon when they usually account for 50% of global growth? And you talked about China. China is trying to teach its company to manage its risk and not to feel that the government is going to be the lender of last resort. So there's this on the horizon. Is, of course, still emerging markets engulfed in the fight against the pandemic. And we don't talk much about this, but only 13% of the population is vaccinated in India, and about a third in Russia and in Brazil. So that looms on the horizon as well. But the good side of this story is, of course, that this is a reservoir of strength that can unleash later and support a recovery again. There's also inflation. Inflation is always on the front burner, even though the consensus is that inflation is transitory, as you know. Everybody keeps talking about that and watching inflation expectations also in bond yields. And of course, inflation matters because the behavior of central banks is what everybody is watching and afraid
Agnes,
of after so many years of support.
Yeah, so could we actually see a protracted correction? The summer month seems to have been, you see a correction, and there was always an investor that could have come in and wanted to buy. Are there too many unknowns? So you mentioned policy and inflation. We also don't 100% know how it will play out in China with Evergrande.
Yes, so there is a slowdown, and there are shocks on the horizon that have nothing to do with the cycle. But I'm convinced that there is a reservoir of strength in the economy. The advanced economies haven't recovered fully yet. Employment is still not back to where it was pre-COVID. There's still people on furlough in Europe. There's still 5-6% less people employed in the US. The supply chains are not back, and that drags down PMI because of high delivery times. Inflation, will actually fall as the cycle peaks because supply chains will be back in order. So in a way, there could be a slowdown, but I think the next stage of the slowdown is not a recession and it's not falling down the ground. It's actually a pickup again and another type of expansion, a reacceleration of the economy. So I think we have to keep our eyes on the horizon and just drive through these shocks in the near term.
Agnes, if you look at some of the things that we're seeing on the market, so basic resources under significant pressure, luxury under significant pressure, what industries do you like actually in Europe?
Well, so these are still very high quality companies, and it's normal to be afraid of a shock to the biggest source of demand for these luxury goods. I think probably, I mean, the value and the quality of these companies hasn't declined because there is a shock in China. The population is not going to stop consuming. And there's one sector of the economy, the property sector, that, that has to learn how to deal with risk and managing its debt. But it doesn't mean that the population will just stop consuming. So I think Europe is quite strong. As you know, it surprised on second quarter. The third quarter is going to be excellent. Europe is far from having been peaked. I am not particularly worried about the directions, of market values on a day-to-day basis.
Is there anything, though, Agnes, which you find actually of better value or more attractive right now? What would you buy?
Well, I don't quote single names, of course, but if my theory is correct, if my view is correct that the economy is still going to reaccelerate later down the road, next year in second half or maybe the end of the first half, then value stocks still have further to go. Growth stocks are still always good, and there are some tech growth stock in Europe that have high values. And of course, credit spreads are very good, NPLs are really low, and when the economy will finally peak, they will be more on that side as well.
Agnes, thank you so much for joining us. Agnes Pellesch there, Chief European Strategist this morning. Now stay with Surveillance Early Edition. Only 6 days to go before the German election. Today we discuss the rebooting of the German economy. Joining us this morning, the Chief Executive of the aerospace company Lilium, Daniel Wiegand, and Professor Jens Sudekom from HHU. But up next, we speak to the man who covered the Arc de Triomphe in giant sheets of plastic to honor his late uncle. Christo's nephew, Vladimir Yavachev, speaks to us. If you have any questions for any of our guests, IB plus TV Go. This is Bloomberg.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, here's what we'll be looking at this week. Canada holds a snap election today. On Tuesday, the Greenwich Economic Forum will begin, and speakers will include Bridgewater co-chair Ray Dalio and former Fed chair Alan Greenspan. The OECD will also update its forecast for major global economies. On Wednesday, we get rate decisions from Japan and the U.S. The BOE's rate decision will be on Thursday, as well as Eurozone, UK, and US PMIs. On Friday, then Biden hosts the Quad Leader Summit with Scott Morrison of Australia, Narendra Modi of India, and Yoshihide Suga of Japan. Now, onto something more lighthearted, but just as important. Giant sheets of plastic have been draped down the Arc de Triomphe's monument in Paris in tribute to a late artist's unfulfilled dream. Now, the memorial in the French capital has been covered in 25,000 square meters of plastic wrapping over the next few days. The idea was first imagined by Bulgarian-born artist Christo, who died last year, and his late wife and collaborator, Jean-Claude. Well, Christo's vision was finally brought to life by his nephew, Vladimir Yavachev, at a cost of about 14 million euros. Well, Vladimir joins us now. Welcome to Bloomberg, Vladimir. I know it wasn't, without a fair share of, if not controversy. I know there were falcons nesting on the Arc de Triomphe, and these things are always colorful and always a little bit of drama ensuing it. Vladimir, we heard from the Paris mayor saying that, look, Christo overwhelms us, Pradas makes us talk. What's the #1 reaction you've gotten the most from people watching?
Oh, I haven't had any time to actually listen to the reactions of people because it was the first weekend. We had a lot of organizational things that we have to take care of. And yes, the project was postponed twice. Initially, we had to postpone it because of the falcon nesting in the Arc de Triomphe. It was supposed to be in April of 2020. We postponed it to September of 2020. Then naturally, we had to postpone it because of the pandemic by a year, because our window of opportunity to complete the project is between July 15th and November 10th, because the Arc de Triomphe has to be in its full glory on the 14th of July for the National Day of France. And it has to be, we have to wrap out and move out of the Arc de Triomphe by November 11th, which is the Armistice Day, the celebration of the end of World War I.
Vladimir, talk to us a little bit about the reason behind this. So I've heard, this is about freedom. I've also heard this is about sustainability. What was the guiding thought behind covering the Arc de Triomphe?
Well, Christo moved to Paris in 1958, escaping communist Bulgaria, leaving communist Bulgaria in 1956, and going through Vienna and then Geneva and ending up in Paris in 58. And at that time, he lived quite close to the Arc de Triomphe, and he had a lot of ideas for wrapped public buildings, being a stadium, prison, parliament, or a monument. And it was his expression of freedom that actually, anybody can do anything they wish, and to express this artistic freedom, because he was very much censored while he was in the academy in Bulgaria. Excuse me.
I mean, this monument. Yeah. Please continue.
No, once he was in Paris and discovered himself as an artist, and he started signing the works with the name Christo instead of his last name Javachev, he really came to the idea of this freedom of expression.
Vladimir, I mean, the monument, right, the Arc de Triomphe is at once military, it's to the pride of France, it's artistic, it's historical. Has our relationship with the arts and culture changed because of the pandemic?
Well, the monument itself was built for the Napoleon built it for the glory of the returning army. Then after World War I, they made the grave of the unknown soldier and the eternal flame in order to stop any marching army to go through the Arc de Triomphe, hoping that this would be the end of all wars. Also, the Parisians use it to celebrate sporting events, and they use it to protest in front of that monument. So many people have different meaning. The monument has a lot of different meanings to many people. The 67 million French take it in different ways. They have their own interpretation of it. And now for 16 days, the Arc de Triomphe wrapped exists, and it is a work of art. It's not a monument. I mean, the monument stays underneath, but it's a work of art that is left to people to have their own interpretations of that work of art, which adds another level. And of course, it's a public work of art. It's free for the visitors to see. And it's self-funded. It's not, we don't use any public money. We don't use any sponsors or donors. It's all self-funded through the sale of the original works of art made by Christo by his own hand.
Thank you so much for joining us, Vladimir Yavachev there, Christo's nephew and project director at l'Arc de Triomphe Wrapped. Now, Bloomberg Philanthropies is providing in-kind support to l'Arc de Triomphe Wrapped, and Bloomberg Philanthropies is, of course, owned by Bloomberg LP, the parent company of Bloomberg News. Now, Scholz wins the third and final TV debate before the election. Frontrunner is facing a grilling at Bundestag over the raid at his finance ministry. We'll bring you the latest from Berlin. And with only 6 days to go before Germans head to the polls, we discuss the rebooting of the German economy with the Lilium chief executive Daniel Wiegand and Professor Jens Sudekom from HHU. Now, if you have any questions for them, please IB plus TV Go. This is Bloomberg.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First word news, here's Ritika Gupta. Hi, Ritika.
Hi, Francine. After several false starts, bankers are finally getting back to their desks in the City of London at HSBC's Canary Wharf headquarters. Traders, salespeople, and close support staff have been told they are expected to be at their workstations 5 days a week. Meanwhile, occupancy at Goldman Sachs' office is at around half and continuing to rise. And it was a big night for streaming services at the Emmys. Netflix won the Best Drama Series Award with The Crown, giving the company the top prize for the first time. Its series, The Queen's Gambit, took the Best Limited Series Award with Apple TV's Plus Ted Lasso, won Best Comedy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Vertica, thank you so much. Now, to talk about the markets, all things market. I like the way we say that. All things markets is MLive's Eddie van der Walt. You're a guru when it comes to all the quirky things that you're looking at, Eddie, so I know we want to talk about gold. But overall, why is there so much anxiousness in the markets? Is it Fed? Is it Evergrande? Is it the debt ceiling? Is it valuation? Is it energy prices?
Look, there's just a little bit of everything here. But I think, you know, we've had a significant drawdown in the S&P 500 futures. I think we're down about 3.8% from the high. But we've seen drawdowns like this before. I think what makes this time a little bit different is the fact that we've got these new narratives we're seeing this sort of second order effects of Delta. We are now seeing that implications for the property market. We're seeing the implications for the energy market. We're seeing it for a lot of other things. And all of those have the potential to just spill over into other sectors of the economy. So, you know, while markets are not in panic mode yet, I think there are reasons to be concerned here. And I think, you know, people are a little bit nervous that the Fed will pull the trigger on tapering very soon. And I think there's just a little bit of pressure, therefore, on the Fed to hold back a little bit when they meet this week.
What's going on with Evergrande? So Evergrande has 300 billion liabilities. And I know we're making parallels, but not with a lot of conviction about Lehman Brothers.
Yeah.
Like, what happens if the authorities let it go?
Yeah, it's a very different scenario, right? I think if the authorities do have the audacity to let it go, I think, you know, we don't know what the full implications of that will be. You know, there will be secondary implications of this. People that would have used this debt to, you know, to secure further lending and so on, and there will be second order effects of that. So it's very hard to see where you draw the line under it. And I think for that very reason, the authorities will be very nervous about pulling back on this at a stage when the world economy is so fragile, right? China has a very different environmental or regulatory situation than the US is, but I do think that their regulators will be looking at this and saying, listen, we don't want that Lehman moment.
Eddie, thank you so much. At gold, you're looking at gold.
Yeah, you know what? Gold is steady despite the dollar being down. Despite the dollar being up, and I think that to me shows there's haven buying, but it's not a panic yet. When we get a real panic, we see gold falling as well.
Gold is gold. Eddie, thank you so much. Eddie van der Walt there from our Markets Live team. Now, Olaf Scholz wins the third and final TV debate, but the front-runner to succeed Angela Merkel is facing a closed-door grilling about this month's raid at his finance ministry. Up next, we bring you the very latest from Europe's biggest economy in our weekly election special. Of course, it's Germany Decides. I can't believe it. We're 6 days away from that vote. It's on Sunday. We'll also have special coverage, of course, on Sunday, starting at 5 p.m. London time. This is Bloomberg.
We didn't want our story to be ended by Taliban.
We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Olaf Scholz faces a closed-door grilling at the Bundestag. The SPD candidate is answering questions about this month's raid at the finance ministry. The three main chancellor candidates clash in the third and final TV debate. Scholz brushes off last-gasp attack from the CDU. And rebooting the German economy. This hour we'll discuss what the future holds for German jobs and industry with Lilium Chief Executive Daniel Wiegand and Professor Jens Sudekum from HHU. If you have any questions for them, IB plus TVGo, or you can tweet me at Flatwa. Now, good morning and welcome everyone to Germany Decides, Bloomberg's weekly look ahead at the Bundestag elections, which are only 6 days away. I'm Francine Lacqua here in London. Now, first thing is first, let's get more on this week's German election. Later today, Olaf Scholz faces a closed-door grilling from lawmakers about this month's raid at his finance ministry. Well, for more, we're joined by Maria Tadeo in Berlin. So, Maria, will this grilling actually impact Scholz's chance of gaining the chancellorship?
Well, you know, Francine, yesterday there was that debate. It was a third and final from the three chancellor candidates. He won that debate, and he still continues to carry this momentum. So this grilling today, this is, and we should be very clear about this, there are no allegations that he personally benefited or he personally enriched from any of those scandals that we've talked about on the show prior. This is more about financial oversight at his ministry, whether or not they did due diligence and whether these outcomes could have been prevented with more diligence. So this is not personally about Olaf Scholz as a candidate, but it's more about the finance ministry. And that is the problem with this grilling. For many Germans, it is hard to pin this down to Olaf Scholz. And when you ask them, what impression do you have from him as a candidate, it's not corruption that they would argue. They'll say it's competent and competency. And this is one of the reasons, perhaps, as to why this is not really removing any of the shine away from this campaign. You know, it's also happening behind closed doors. So again, it does show that to make this a public condemnation will be difficult for the opposition to cling onto this card. Again, when you look at polls, he's not lost any of the momentum that he did going into this election in the final week of campaigning. And for the SPD, it really is about not making mistakes in what's left of the campaign in this week.
Maria, give us a sense of what the polls are. How many more polls are we getting, you know, before Sunday? And actually, with the margin of error, could we really see any type of coalition?
Yes, and you know, Francine, you make a very good point. Again, on the margin of error, this is something that pollsters in Germany will tell you time after time. When you have three parties that are polling and they're so close together, the margin of error can really change things in the real election. Now, in terms of the past few days, we have seen the CDU regain some traction. We have seen Armin Laschet also winning some points, perhaps because we've seen him on the attack and on the defense, and he's been much more effective on that line. Having said that, Francine, yesterday in that debate, Annalena Baerbock did come up with a line that to me was a highlight of that debate, in which she said, for me, it would be right for the CDU to go into the opposition. She's now clearly presenting herself as the junior partner for the SPD. This is a natural coalition for the two of them. And we also know that Olaf Scholz does favor the Greens over the left when it comes to forming a coalition. So we are getting now some clarity as to what can happen the Monday after the election.
Maria, thank you so much. Our Maria Tadeo there in Berlin for us. Now, Germany's car industry is a pillar of the economy, and it's undergoing a major shift as pressure to electrify gathers pace. Bloomberg's Matt Miller takes a look at what it means for the industry.
Germany's automakers have been a symbol of the country's economic miracle in the 20th century. But as we move deeper into the 21st century, they've been dogged by international competitors, forced to cut headcount and spend billions to electrify their fleet. German manufacturers like BMW and Volkswagen have almost been dragged kicking and screaming into the electric era after a huge diesel scandal and under very strict EU regulations. Plus, they've been motivated by the giant market cap of Tesla. Germany's political parties also continue to pay lip service to the green revolution with bonuses for electric car buyers as well as targets that they've set. For example, the Greens and the SPD now aim for 15 million EV sales by 2030.
Now electromobility is really keeping up the pace, and we are right in the middle of it.
We need time to get electric, because we need the capacities, the plants for the battery cells, and that will take time.
We are accelerating our path towards full electrification, and in fact, we're really going to go for it and see if we can convert our whole portfolio to fully electric by the end of this decade.
Now, electrification doesn't necessarily help with the job cuts. It takes fewer people to build electric motors. One survey says a quarter of the industry's jobs will be obsolete within the next 10 years. But of course, the green revolution doesn't stop with electrification. In fact, brands like Audi and Volkswagen believe that the shift to automated driving could be even more transformative than EVs, and they're going to have to add headcount to make that a reality. Now, buzzwords like green and digital are on the lips of many politicians as they head into elections this month. But here at the Munich Auto Show, the term climate neutral has become ubiquitous as this iconic industry shifts into the next century.
Bloomberg's Matt Miller there with a look at the challenges for the German auto industry. Now, the struggles the German auto industry has faced as keeping up with Tesla are a sign of the issues that companies has with embracing technology. Although the German workforce has an above-average share of tech workers, it's also still less than 5% of the workforce. And business leaders have warned infrastructure issues like slow broadband risks hampering innovation. Well, we're now joined by Daniel Wiegand. He's co-founder and chief executive of Lilium. It's a Munich-based air taxi startup that went public via SPAC merger. It valued the company at around $3.3 billion. Daniel, thank you so much for joining us. I want to talk about Lilium, but first of all, I want to ask you what you need from the next German government.
Hello, and thanks for having me. So Lilium is a company developing an all-electric battery-powered jet aircraft with 7 seats that can take off and land vertically. And we're using these airplanes to connect city centers to other city centers, creating an entirely new, sustainable, high-speed transportation system that saves hours to our customers and becomes the backbone of of some future transportation. So what do we need from the government for this? I think there's different things that can help us. First of all, there can be an expedited regulatory system to approve landing sites for this new transportation system and these airplanes. There could be an exemption for electric airplanes from the fossil fuel tax that we currently have in aviation. And last but not least, the governments could step up with funding or act as a customer in this new sector.
Daniel, if you look at innovation, one of the biggest buzzwords actually in German history, labor wages are quite expensive. Doing business is quite costly. Is there any red tape that you need from the next government to be cut down significantly? Or because you have Tesla also betting quite big on Germany, is this really a testament to the strength of Germany in Europe?
So I think we have seen a great movement on the regulatory side of the aviation authorities in Europe. They've been very fast in creating regulation that enables this kind of electric airplanes to be certified for passenger service. Where we can still see improvements, I think, is any kind of simplification to found new tech businesses, and that really ranges from funding down to the tax system and other parts of regulation, where simplification always helps new young companies.
Daniel, having Tesla actually betting big on Germany, I don't know whether it puts extra pressure on some of the car makers and whether this is good or bad for Lilium.
I think any new tech company that grows in Europe, be this one that comes from outside like Tesla, or be this one like Lilium, is going to be tremendously helpful for Europe, because I think we have big challenges ahead in the next 10, 20 years, from climate change to big geographical and geopolitical challenges. And that means all these will be ultimately solved with deep tech and in an economic and technological race. And I think here, Europe and Germany are on a good track in growing our tech sector, but it's still not in a size where it needs to be. So tech is going to create new jobs, but it's also going to solve these problems of the future.
So what do you need, for example? Lilium has a pretty big valuation right now. What do you need to be able to compete with some of the US big startups that seem to be scaling quicker than in Europe, that maybe don't sell as quickly to private equity funds? Like, what's the difference between doing business in Europe and doing it in Silicon Valley?
Well, I think we are now in a good position because we just recently listed our business at NASDAQ and we are well funded now. But next to funding, there's other things like a harmonization of the European market in different areas will be tremendously helpful. We'll need an as free and fluent as possible movement of workforce within Europe, because there's exceptionally strong universities, there's very well-trained workforce in Europe, but we need to make sure that people can freely move where they are most needed.
So, Daniel, if there's one thing that actually, if you were in charge, or if you were, the head of the finance ministry, that you would change for the next government, what would it be?
Well, I'm not sure I'm in the right position to answer this kind of question. I'm not a finance expert and not a politician. But I think I would go with trying to simplify things is the best thing you can do.
Yeah, well, I think, Daniel, actually, you'd get a lot of people's votes because people, at the moment, maybe seem disenfranchised with politicians. Daniel Wiegand, the co-founder there and chief executive of Lilium, joining us this morning. Now, don't forget, you can also catch up on our special preview of what's at stake for business in Germany's election. Germany Decides, the chief executive briefing, available to watch on Bloomberg.com or on YouTube. Now, coming up, what the election could mean for Germany's fiscal policy, we'll speak to Jens Sudokum, professor at the University of Düsseldorf. This is Bloomberg.
from New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg this is Germany Decides. This is Bloomberg, and I'm Francine Lacqua here in London. Now, it's the first day of trading for the expanded DAX index in Germany, and it's got off to a negative start. Let's get more insight with Ritika Gupta. So, Ritika, what's changing for Germany's blue chip index?
Yeah, Francine, this is quite a makeover here for the DAX. They're increasing the number of stocks from 30, to 40, and they're adding a lot of those growthier names. So the likes of Zalando, the online retailer, and HelloFresh, the meal kit provider, they did quite well during the pandemic, and they'll be also adding those heavier names like Airbus, Puma, Siemens as well. So you're likely to see a bit more of a shift here. So some of those dividend-paying stocks like BASF, some of those having reduced prominence, and seeing the DAX shift more to some of those growthier names.
So, Ritika, will it help the DAX compete on the international stage?
Yeah, well, that's a thought here, Francine, is that it will help them play up more to the international scene here. If we have a chart here that spans over 20 years, I don't know if we can bring that up, but it shows really that if you strip the DAX of its dividends, yes, it is outperforming the Stock 600, but not by a very big gap here, and it is really lagging the S&P 500. So the idea is that maybe it could help it play catch up by adding these newer and fresher names, and also, you know, when we've seen it with a year in the pandemic, of course, Lufthansa having to drop out because of the coronavirus, and of course being mired by that Wirecard scandal and that bankruptcy, which of course started a lot of these changes in the first place, Francine.
Ritika, thanks so much. Ritika Gupta there with the very latest on the DAX. Well, Angela Merkel was a stable presence overseeing the German economy despite being in charge during two major recessions, the global financial crisis and then the pandemic. This economic shock from coronavirus upended years of German fiscal policy, ending Merkel's balanced budget regime to unleash hundreds of billions of euros in aid. Now, debate rages among the parties over the emphasis on public spending and investment once the crisis is over versus returning to balanced budgets. So let's talk more on the economic aspects of this election. We're now joined by Jens Sudekum, Professor of International Economics at the University of Düsseldorf. So, Professor, thank you for joining us. When you look at the economy, high labor costs, the transformation that actually the German economy also needs to get into, what are some of the policies needed that need to be a priority for the next government?
Yeah, I think the transformation of the manufacturing sector and the economy at large, I mean, that's going to be the biggest challenge for whoever will be the next German government. So we have the climate goals for Europe, which mean 55% of emission reductions by 2030. And Germany will basically have to achieve the same number. And that will be enormously costly fiscally. So the headline number for reaching the climate goals is something around 500 billion euro of additional public investment that is needed. But it's not only money, it's also modernizing all the procedures, because many of these investments, planning these investments, take awfully long, and that has to be speeded up dramatically.
Okay, so what does it, Jens, what will be the most difficult thing actually for the next government to achieve? I know at the moment, I don't know whether you think everything's open or whether you're ready to make a bet on what coalition that could be formed.
Yeah, well, I'm not sure, but I mean, if you look at the latest polls, it's becoming, I mean, the Social Democrats, they are now ahead by a margin of something like 5 percentage points over the Conservatives. And if you read the statements of the Green Party, of the Liberal Party, I think that what we call is the so-called traffic light coalition, which means the Social Democrats together with the Greens and the Liberals, that's probably the best bet at the moment. And I mean, if they actually form the government, we need to square the differences in the platforms, because there's, especially on economic policy, there are quite some differences between, for example, the Social Democrats and the Liberals that need to be overcome.
Professor, I mean, she was one of the most influential leaders in the world, Angela Merkel, helping to determine the course of European and global politics. What will be hardest, actually, for the next government to replicate?
Yeah, I think if you look at the three figures that are competing for her legacy, I mean, Olaf Scholz has been vice chancellor in the last government, and his campaign is basically built on this idea that he's like the legitimate successor of Merkel and will continue with her style also on the international scene. And probably that could work. The biggest challenge that I see, talking again of this transformation, is we need to come to grips with how to finance and how to organize these big changes that are ahead in the German economy, both in terms of transformation with the climate, also with digitalization. That will cost a lot of money, and that is at odds with the current stance that we have in fiscal policy. I mean, some parties still believe that we need to move back quickly to this balanced budget approach or the German debt brake that we have in the constitution. And I think that's naive. That will not work. I mean, with all the challenges ahead, a government needs to be ready to spend a lot more on public investment, on private investment, support for private investment. And I think this needs to be clear for whoever will be the next German government.
And so do you think, Jens Sudekum, that actually austerity will be a thing of the past?
Factually, I believe yes. Because if you drive Germany and if you drive Europe back to austerity, I mean, that will cause a big recession. In the extreme, it could mean the end of the Eurozone. So I think it's just simply not possible to move back factually to austerity. So I think one challenge for the next German government is to pursue policies that are de facto not austerity, but that are still, in coherence with the laws, with the fiscal rules, because they're in the constitution, right? So you have to obey them, and you have to work basically, you have to find ways how to work around them without actually imposing austerity.
Jens Sudekum, thank you so much for joining us. He's a professor of international economics at the University of Dusseldorf. Now, coming up, Armin Laschet on the defensive as his rivals seek a united front. We get the latest on last night's German election debate. That story is up next, and this is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I don't want to make any secret of the fact that I would of course prefer to form a government together with the Greens.
I think it's time for the Union to go into opposition. We have a lot of common ground with the SPD in many areas of social policy, but as I said, we need strong Greens above all to make a real fresh start.
And the real directional decision that is at stake now is, will there be a red-red-green alliance? Many positions that we have heard today are also congruent with the left party, or will there be a civic-led government?
Those were the three main candidates at the third and final debate before the election on September 26. Now let's get more on the debate with Bloomberg's Maria Tadeo. So Maria, the last and final debate, 6 days until the election. Was it actually enough to swing voters in the final week of campaigning?
Well, Francine, if you look at the poll that was done right after that debate, it would suggest it wasn't enough to swing the public opinion in Germany. Olaf Scholz won that debate. He's won every single one until now. And Armin Laschet, it is true that he has regained some ground, but that those gains are still very minimal. The CDU, if polls are correct, are heading for a terrible, terrible result on Sunday. The one thing that I would highlight, and we played it in that clip before you went to me, it's this almost suggestion from the Greens that they've made up their mind and they've decided that they want to go into a coalition with the SPD, and that is their preferred and natural ally. Annalena Baerbock yesterday was very clear that it would be right at this stage, if the polls are correct and the SPD comes first, for the CDU to go into the opposition. And that is a real shock, Francine, because we're looking at a government that would not feature the CDU for the first time since 16 years, and not a good succession plan to Angela Merkel, who would now go into the opposition.
So, Maria, is there such thing as the undecided voter in Germany right now? And I don't know whether 6 days gives enough time for any candidate to try and swing them.
Well, you know, there are, when you look at polls, there is still a mass of Germans who say there is a lot of changes. Angela Merkel, and this is something that really we need to very much factor. Angela Merkel has been in the running for 16 years. This is really part of the political establishment. And I have to say that anecdotally, when I speak to Germans, who are you going to vote for? Have you made up your mind? I am always surprised by the number of Germans who say, I don't like any of the three candidates. I'm unsure, but we'll have to wait and see. So there is a mass of voters that are undecided. However, when you look at the polls, Francine, the SPD still has that lead, and that lead has not given up.
Maria, thanks so much. I'm Maria Tadeo there in Berlin for us. Now, stay with Bloomberg. On Sunday, we bring you the live results and reaction after polls close in Germany's election. Lots more coverage still ahead. This is Bloomberg.
just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
You have inflation suddenly appearing for the first time in, really over a decade, and it seems undeniable, and it seems as if it's becoming more widespread. So it's a lull before the storm.
We're still expecting that we'll have some clarity and probably a start to the taper before the end of the year. But keep in mind, there's other things in flux too, such as the fiscal policy.
You're going to see a lot of stupid posturing and games of chicken in Washington, but I have every confidence that this will be worked out.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, September 20th. Our top stories today. Nancy Pelosi in the spotlight. The fate of President Biden's $4 trillion economic agenda is largely in the hands of the House Speaker. Evergrande's moment of truth will find out this week if the troubled Chinese property giant will continue meeting obligations to bondholders. And power shortage. The British energy industry is desperately seeking a massive bailout from the government. Keep on mispronouncing it, Danny. I'm Francine Lacqua with Danny Berger here in London. Sometimes I call it Evergrande, sometimes Evergrande. Matt Miller in Berlin. Kaylee Lyons is actually off today. Danny, there's a huge sell-off in the markets. They're worried about the Fed. They're worried about Evergrande. And then they're also worried about the debt ceiling.
Exactly. Francine, to be fair, I think if you were in Italy, Evergrande totally makes sense. But yeah, it is such a concern in the markets today. And it's been surprising because commentator after commentator, Nordea, for example, saying, look, this isn't a Lehman moment for the markets. It will be contained. But the markets, for the most part today, it has not been contained. Now, this markets go a little bit deceiving because China is off on a holiday. So this is actually reflecting the price action of Friday. What actually traded is Hong Kong, for example, those shares dropping dramatically, the Evergrande share price dropping dramatically as well. India down too. So there you go. There's the price action for Evergrande, closing down some 10%, closing near the lowest market cap on record. So Hang Seng feeling the pain. That's what's taken the beating with China off on holiday. Again, how much of this is going to seep through the rest of markets? Now, if you're concerned about Asia, it's not just Evergrande, it's the price of iron ore as well. China wants green skies for the Olympics. They want to curb steel output because of that. So we've seen that drop 9 consecutive days in a row, also impacting the Aussie dollar there. We've seen a record short positioning when it comes to hedge funds positioning on the Aussie dollar. Now let's get a quick check and whip through your U.S. markets as well. Those, again, contagion risk from China, from the Evergrande story front and center. Yes, there's a Fed decision today, or rather this week, but today you don't care about that. You care about what's happening on the other side of the world. So S&P 500 futures, they're down more than 1%. Getting the bid is the Bloomberg dollar spot BBDXY. That's up 0.25%. So in general, those havens doing better as we not only worry about China, we worry about the debt ceiling. At the same time, you have a yield which is lower by about 2 basis points. So again, same sort of attitude there. And crude, Matt, we have WTI down 1.7%. So it's not just equities, it's commodities that are having a pretty ugly start to the week.
Yeah, absolutely. I think really Evergrande is behind all of the turmoil that we're seeing in the markets. The debt ceiling is interesting, but as Larry Summers said, you know, this is kind of a game of chicken that we've all seen play out so many times. Certainly markets have seen it so often. Take a look at what Evergrande is doing to European markets. Bright red across the continent and in the UK as well. So we're seeing losses of 2% or more on most equity indexes. FTSE down only 1.5% in London right now. But big losses. If you take a look at the Stock 600, the broader European benchmark index, it's down 1.8% right now. You can see that investors are piling into the German Bund, pushing the price up and the yield down right now at negative 31 basis points. As Danny pointed out, investors are going into the dollar. So you see a drop in the euro, a drop in the pound, as really safe haven assets are bid on concern that this contagion from an Evergrande default is going to spread around markets around the world, Francine.
I really like what you did there, Matt Miller. Very clever. I mean, it's a, you know, Evergrande concern.
Well, how do the Chinese pronounce it? Let's remember, this isn't an American or an Italian company, right? It's Chinese. So we don't know exactly how it's pronounced in their native tongue or what it means.
No, you are 100% right. What we do know, though, is that it has 300 billion liabilities. So if authorities were going to shore it up, it's going to be costly. It's not going to be cheap, as the British would say. A look at what else is going on this week. Head of states are scheduled to attend a week-long United Nations gathering in New York City, expanding access to COVID-19 vaccines and confronting the rising dangers of climate change will dominate the agenda. On Wednesday, it's the Fed's rate decision. It's unlikely to announce a start date to scale back asset purchases this week, but is still on track to begin this year. Now, the Bank of England also holds its monetary policy meeting on Thursday. The central bank's 8-member committee is split as to whether the criteria has been met for tightening. Also on Thursday, Evergrande due to pay interest on notes. So this is a key test of whether the developer will actually continue meeting obligations to bondholders. And finally, Germany holding its election on Sunday. Polls actually show the Social Democrat Party is set to win. It's likely to need at least one coalition partner to achieve a majority. Now, House Democrats may hold off on sending $550 billion of infrastructure bill to President Biden for his signature. It's part of a plan to keep the party united and the president's economic agenda on track. Now, House Budget Committee Chair John Yarmuth spoke about the possible delay on Fox News Sunday yesterday.
The Speaker does not have to actually advance the bill to the, if we pass it in the House, does not have to actually have to send it to the President for signature. She can hold on to that bill for a while. So there's some flexibility in terms of how we mesh the two mandates.
Anne-Marie Hordern, Bloomberg Washington correspondent, joins us from our D.C. bureau. And Anne-Marie, good morning. There's the debt ceiling left, right, and center.
Needs to work through this week. We're going to get legislation on the debt ceiling this week, but what John Yarmuth there was talking about, the representative, is the wiggle room that Speaker Pelosi has in terms of bringing the vote of bipartisan infrastructure, which she promised to House moderates by September 27th. Now, that's just next Monday. The problem is the progressives on her party say they will vote this down unless they get the reconciliation package, which means that there's a very, very fast timetable for the House and the Senate on the Democrat side to decide the size, scope, scale of this reconciliation package. It was always going to be a very delicate dance, but you could see as we inch towards that 27th deadline, it is very much so a high-stakes game for the leadership.
I wonder about the AU, UK, US subspat. To me, it's been exciting for days. I couldn't believe that Macron recalled his emissaries, recalled his ambassadors from the US and Australia. It seems like a huge spat. How's this going to work out?
You're not the only one, Matt, that was shocked. Washington was quite surprised that this was the level that Macron went to in order to, in this escalation of this spat after that nuclear submarine deal with Australia and the United Kingdom. I think many are questioning, does the punishment match the grievance, in the sense that there have been spats between Paris and Washington in the past, but this is an escalation that we have never, ever seen before. It's the first time ever that Paris has recalled the ambassador. How this is going to be potentially smoothed out, we do know that President Biden will be having a phone call this week with President Macron, and potentially that can help soften the waters. But we already see that this is definitely having a huge impact on the relationship, in the sense that also political in Europe is talking about the fact that France wants to now rescind on some of the trade agreements they're working on with Australia. So a lot of this in Washington is viewed as definitely they don't want to escalate it, but they also view it as very a domestic play for Macron.
Right.
You know, France has an election in 7 months, and Marine Le Pen in some polls is starting to rise. So potentially this is his way of talking tough to French constituents.
Right, tension's not going anywhere. Bloomberg's Anne-Marie Horton in Washington. Thank you for staying on top of this for us. Now to China, where it's a moment of truth for struggling Chinese property giant Evergrande. Interest payments on 2 notes come due Thursday. It's going to be a key test for whether the developer will meet obligations to bondholders, even as it falls behind on payments to banks and other investors. Kevin Kingsbury, Bloomberg China credit editor, joins us now from Hong Kong. Kevin, one of the big questions that seems to be lingering is whether or not regulators step in. Is this going to be a Lehman moment or more of a Bear Stearns moment?
We're going to have to wait and see. We still don't have much clarity as to how exactly the government is going to act on Evergrande. China Huarong, the bad debt manager, a few weeks ago, the government was part of a bailout package for that company. Now, they don't want too big to fail to become moral hazard. They don't want the moral hazard. They want to make sure that these privately held companies kind of stand on their own 2 feet. They rise or fail on their own. And the government does not want to get involved until they really need to make sure that there is no systemic risk, that it doesn't make major contagion. So that's where we are right now.
What are we watching? I mean, the UN is one thing we're watching. I know Chinese onshore markets are closed today, right? So is all the action happening in Hong Kong and then reverberating around the world?
Right. It's very much an offshore play at the moment. China markets are closed both tomorrow and today. They will reopen on Wednesday. At the same time, Hong Kong's market will be closed Wednesday for a holiday itself. So we have this kind of holiday mix where that's probably also helping to make some of the volatility that we're seeing today in the markets globally, because we have a little bit less of market players involved at the moment.
For the very latest, thank you so much, Kevin Kingsbury there on Evergrande. Now, UK energy companies are also seeking a massive government bailout. This is as a surge in gas and electricity prices threaten to push suppliers out of business. Well, Eddie van der Veld of Bloomberg Markets joins us now. Eddie, I mean, this is a huge political hot potato, but do we believe Prime Minister Johnson, where he says actually prices will stop going down? Is this just temporary?
Yeah, I think I think it's a difficult one for the UK government, because they don't want an energy supplier going under, but they don't want to take on the risk as well. And the energy suppliers, the big ones, say, listen, we don't want to take on these extra customers at a time when energy prices are so high. So it's a really difficult one for them. But for the wider market as well, these spillover effects into the wider economy, the effects on inflation across Europe. you know, I don't think we have seen this play out yet, and it is really a very interesting moment just to see how important energy markets are for the global economy.
So if that's the global market macro risk, what about some more of the energy-focused type assets? Do you expect price action to continue to pick up in things like natural gas?
So I think there is a real risk here that what we've seen over the last couple of days is that we've seen speculative bids come in on this as well and pushed prices significantly higher. I think there is a risk here, Danny, that as we see, particularly if we see wind speeds pick up, if we see colder weather, I think in those cases there is a risk that we see prices pull back significantly over the next few sessions.
Eddie Vanderwall of Bloomberg Live, thank you so much. A lot of risks to digest there that you will stay on top of for us. Now I want to give you a look at some of the stocks moving in pre-market trading. We have to keep an eye on China. This ETF is really fascinating to me because the direction on daily China 3X ETF, that's 3X because your exposure to the Chinese index is 3 times leverage. So it's no surprise that we're seeing a down day in Hong Kong markets, that this sort of ETF is going to be down more than 7%. It's also just frankly a way to trade China when the market itself is closed. So we could see mass exodus from this ETF as we are concerned about the risks of Evergrande spilling out, as we were just talking to Kevin about. Now, it's a down day for most markets, and cryptocurrencies are not exempt from this. Any sort of crypto-related stock seems to be dropping in pre-market session. Marathon Digital is one of them, down 5.7%, trading at $33.80. Cryptocurrency really under pressure with Bitcoin breaching below $45,000. It's a key line of resistance. Of course, when it comes to Bitcoin, it's all about those sort of psychological levels that seem to drive sentiment. Now, finally, Tesla also pointing down today, down 2% pre-market. It's following a Wall Street Journal story that's saying that the U.S.'s top investigator has been urging Tesla to address some of the safety concerns before they expand some of the self-driving features. Now, Elon Musk has said that they would upgrade some of those features as well, but so far the cost that might imply is certainly bringing down Tesla shares. Francine, it does seem that when it comes to Tesla, a lot of times these regulatory concerns are what sort of drive the price action, but you have to imagine once we get the cash equity trading, stories like Tesla might kind of get lost in the mix considering how macro adverse today's session seems.
Yeah, I mean, Tesla also has a huge play actually in the German economy and the German election. So we'll have a lot to chat about with our Matt Miller, who also did a fantastic roundup of some of the car makers in Germany and what that means for the German election. Now, coming up, Koku Agbo, you're welcome, Matt. Koku Agbo Blois, Société Générale, Global Head of Economics, Cross Asset and Quant Research. He joins us. We'll talk about the Fed, we'll talk about policy, and of course, we'll talk about dollar dynamics. This is Bloomberg. China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix and Danny Berger in London. Kaylee Lyons is off today. Now, I have been taking a look at the shift that we're going to see. Some people call it the fiscal cliff in terms of spending from the U.S. government. It's not really monetary policy that may matter as much when you look at the huge fiscal cliff coming. This chart, for those of you listening on radio, I'll walk you through it. And welcome, by the way, to the program, shows the fiscal policy impact on GDP. Obviously, it's been huge as we spent trillions and trillions of dollars. But when we stop doing that, you could see a huge drop, and that's precisely the worry. Joining us now is Koku Agbabloa, Global Head of Economics, Cross-Asset, and Quant Research at Societe Generale. Koku, welcome to the program. Great to see you again. What do you think about this fiscal cliff? I mean, we have spent record amounts of money at the United States government, and that looks like it's set to stop possibly after the infrastructure bill, or maybe before we even get there.
Yes, so this is clearly a theme we've been talking with clients for a while. To put things into numbers, $12 trillion. So this is the combined monetary and fiscal injection that took place in 2020 and 2021. Clearly, the fiscal cliff, or we call it the fiscal impulse, is going to be lower in 2022 and forward. If you just need to think about the budget deficit in the US, that's going to go from 3 trillion to something around like 1.5 trillion. But it is important to bear in mind, though, that the reason why we had all that money injected in the first place was because of COVID and the restriction and the confinement, i.e. there was a collapse in demand. So the economy has recovered since, and unemployment is coming down, and people are going back to work. So it is logical that, given the output gap not being as significant, that the fiscal injection also needs to be lower. So I don't see it necessarily as being a sort of a risk to panic, but it is clearly less supportive for markets. But the economy has been also able to stand on its own feet. So I think it is a worry, but it is not necessarily going to unravel the rebound in risk asset we've seen so far.
So, Koku, overall, what is the market worried about today? It's still a 2 to 3% decline. Do they worry more about other things? Is it the debt ceiling? Is it inflation back at the forefront? Or really, actually, we don't know how to read China at this point?
Yes, I think the market is clearly worried. I think the Delta variant is still a big tail risk. We've increased our downside probability from 15 to 20% around the Delta variant, and the risk of the Lambda or the Gamma variant. But if you think about inflation, it's the transitory camp seems to be winning the argument, even though supply chain disruption is making part of the market stubborn in terms of high prices, and natural gas prices are the recent addition to this whole picture of semiconductor chips and the impact it had on the auto industry. So I think sustained inflation is the elephant in the room. And then the last very important one is the combination of fiscal and monetary tapering that could also add to that complexity.
Koku, if that's the fundamental picture, I want you to just get that out the window. Just throw it away and put on your quant hat. I have to wonder, given some of the market volatility we've seen in S&P 500 that's unable to break its 50-day moving average, do we see some of these quant funds that balance based on volatility in the market start to force sell into the downturn we've had?
Yes, this is a good point. I think one measure to look at is the equity bond correlation. So a lot of these CTA strategy tend to look at assets across asset classes, essentially. So if you have bonds and equities falling at the same time, this is usually when you trigger stop losses and unwinding. At this stage, the bond market has been fairly resilient simply because the Fed is still buying 120 billion of bonds and mortgage-backed securities per month. And equities have been relatively sort of stable simply because there is no alternative. Negative bond yield is still the story, and they have been falling. So if you are an investor, you have no other choice but to own credit or equities to make any sort of return. So we'll have to watch the equity bond correlation in the short term for that deleveraging to occur.
Coco, I got to ask you about Evergrande. We're waiting for the official default today, and then I think again on Thursday in terms of a failure to pay. How much does this matter? The shift that we're seeing in China, bond markets testing the state and the state replying, we're not going to help out.
Well, this is an important point, but you have to also remember that there has already been a series of defaults, probably not as big as Evergrande, but the Chinese government policy has been to deleverage its economy. It has a lot of sort of zombies, so to speak, or debts that haven't really been sort of cleaned up in the system. And this is something we remember back in 2015. So I think the bonds already trade at 30 cents on the dollar. So this is not a surprise. And investors have been expecting a lot more regulatory changes with the education tech and some of the other measures. So the common prosperity agenda is more an evolution in the Chinese thinking than a revolution. So I suspect the impact will be limited because the government can always step in to avoid contagion to the Chinese financial system. But there's a clear message that they want to clean up the bad debt that has been plaguing the system for a while.
Coco, thank you so much for joining us. Coco Agbo-Blua there, Global Head of Economics, Cross-Asset and Quant Research at Societe Generale. Now let's get straight to the Bloomberg. First word news, and Treasury Secretary Janet Yellen is warning of a catastrophe if Congress does not raise or suspend the U.S. debt ceiling. In the Wall Street Journal, Yellen wrote that the government could run out of money to pay its bills sometime in October. Now, Senate Minority Leader Mitch McConnell has rejected appeals to Republicans to join with Democrats in boosting the debt ceiling. After several false starts, bankers are finally getting back to their desks in the City of London. At HSBC's Canary Wharf headquarters, traders, salespeople, and close support staff have been told they're expected to be at their workstations 5 days a week. Meanwhile, occupancy at Goldman Sachs' office is around half and continuing to rise. In Spain, Spain's Canary Islands off northwest Africa, a volcano erupted over the weekend, forcing the evacuation of some 5,000 people. Now, it took place on the island of La Palma. News reports say about 100 houses have been destroyed, but there have been no injuries. The lava flows are moving towards the sea at a speed of close to half a mile an hour, which also, Matt Miller, changed to what the Prime Minister could do. I think he was doing New York, but he's staying behind, and of course a lot of the focus is on the people in La Palma.
Yeah, absolutely. He was due in New York, of course, at that big deal UN meeting. I think he's going to try and make up for that, but he had to go to La Palma right now. You've got lava flows that are just rolling over homes right now. I believe a couple of dozen homes have been destroyed. Fortunately, as far as I've read so far, no one has been injured because there were a series of earthquakes. I think there were dozens and dozens of earthquakes ahead of this, and their early warning system worked, so they were able to evacuate people in time. But the lava flow scenes have been incredible, Francine. It's rolling at, I think, 2,500 feet per minute, so pretty quick.
Yeah, I have to say the pictures are just absolutely incredible. It's different from Pompeii because now we have monitoring in place. I know there were also a couple of volcanoes over in Italy that were active over the summer. I mean, it's just incredible pictures, Danny.
Yeah, it really is. And I have to say, just to put this in the wider global context, we're about to head into COP26, or at least it's already underway. You have climate goals coming out of the U.S. You have to wonder if these sort of pictures really just amplify that need, amplify the progress that they are hoping to make. Again, it's a big week for that, so we'll see whether this comes up in those meetings.
Yeah, coming up, we'll of course talk about UNGA, UN General Assembly Week. Also, it's less than a week until the German elections. We'll speak with the German Green politician Jürgen Trittin. Our Matt Miller talked about cars, and I have to say, Matt Miller, I know you're the resident expert on cars, but this is a huge economic weight, and if you have the Greens coming, it could shape the difference, actually, of the German economy going forward.
Yeah, absolutely. And when I was in Munich, I heard a number of car makers, of CEOs, saying they would like to see higher gas prices and a bigger carbon tax. That's definitely something we'll ask Jürgen Trittin about next. This is Bloomberg.
electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose with this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lack with Danny Berger in London. Matt Miller in Berlin. Kaylee Lyons is off. Matt, a lot going on in the markets, not on the good side. I have to say it's a pretty critical week for the markets. We have a lot of news, and it's a wall of worries kind of taking over this Monday.
Oh, wall of worry has been
You like
called.
that?
I love it when we get into these wall of worry periods. Of course, if everyone thinks the market's going to go down, it's going to creep slowly up. Not today, of course. We're seeing big drops here, 2% and change. I'll leave it to Danny to walk through what we're seeing. But this, I think, is unrelated to what's going on in the rest of the market. This is just an Evergrande issue, and if the contagion is limited, then you don't really need to worry about it beyond the initial shock waves. But I guess that's a pretty big if today, especially looking at these movements.
Yeah, talking about movements, Danny, what are you seeing in the markets?
Yeah, as you guys have been laying out, it is a volatile down day. You know, it's interesting. I was talking with banker Prevase earlier today, an analyst there who's basically saying that, look, there's certainly risk for things like the euro, things like Europe that has this exposure to China. And that is what we're seeing today. The Europe stock 600 down 1.8%. Of course, China wasn't open today, so a lot of the angst perhaps spilling out into other markets because of this lack of liquidity. Francine, I think you have the stat. What is it? What is the liabilities of Evergrande again?
$300 billion.
$300 billion. That is the equivalent to 2% in terms of Evergrande's size, 2% of China's GDP. So it's no wonder we have this nervousness. S&P 500 down 1.3% in your pre-market trading. Those SPUs there falling under the 50-day moving average. That has been a signal to go and buy the dip. We're seeing dip buyers, though, absent from this market. What's gaining is the Bloomberg dollar spot up more than 0.25%. It's that sort of defensive posturing. Of course, it's not just the China story. It's the Fed. It's the macro story. Either way, though, it's a bad day for commodities. Iron ore down for a 9th straight day, below $100 a barrel. Its worst streak since 2015. China wants greener skies for the Olympics. They're curbing steel output, so that's what's hurting there. Here are your pre-market movers. We've been talking about China. You want to play it today. You want to play in today's U.S. market. Go into the ETFs. That's what this one is. A 3 times levered China ETF. No surprise, down more than 7%. Marathon Digital dropping 6%, with Bitcoin dropping below $45,000 as well. Bitcoin not acting as a hedge as perhaps some Bitcoin bulls would hope for. And finally, Tesla down 2%. Wall Street Journal report today saying that the U.S.'s top crash investigator wants Tesla to go and address safety before expanding its cars. Matt, I know you've been paying a lot of attention to Tesla and just cars in general, given what's happening in Germany this week.
Well, Yeah, you know, I have to say, on a personal note, on an editorial note, I saw my first Model Y in the flesh here. Actually set off the alarm because my motorcycle was too loud. I actually really love it. I'm not a huge fan of Teslas. Obviously, it's incredibly subjective, but I really love the Model Y. The alarm sensitivity is kind of high. I don't think just starting a BMW R9T next to one should set it off.
It's like an upgrade. I'm sure they'll desensitize it.
Yeah. I'm also imagining Matt Miller out the side doing this, sticking his thumb up on the side of the road when he sees the Model Y going in to check it out for himself.
It's actually parked next to me in my building. But yes, okay, I want to get over to Maria Tadeo. She's obviously here covering the German elections for us. Coming up soon, this Sunday, front runner Olaf Scholz faces a potential stumbling block today when he faces a closed-door grilling from lawmakers about this month's raid at his finance ministry. Will he be grilled? Will they be grilled? Does it make sense that the prosecutor raided the German finance ministry and the justice ministry? I mean, to me, Maria, that is in itself a massive story. Where does the prosecutor get off, or is there a smoking gun in Olaf Scholz's institution?
Yeah, you know, you'd think that would be a big story, but Matt, if you look at the fallout of this, and in particular, if you look at the timing of this a week before the election, what I find incredibly interesting is the fact that it's had no impact on the SPD polling, and it's had no impact on Olaf Scholz, who, by the way, had a third debate yesterday and won that debate. So it's 3 out of 3. So you could argue, you know, to some extent, he's already morphed into Angela Merkel. Scandals don't seem to be affecting his polling in any way. I do have to say, however, the format of that grilling today is behind closed doors. It is difficult to make a big media deal out of this when you don't see the candidate. And the other issue, Matt, is that when you look at the actual details, it's very important to stress that no one has accused Olaf Scholz of personally benefiting from any of this or enriching himself. This is about flawed oversight in his ministry. You also have to factor that the CDU is up in arms over this, but this was also under a CDU government. The CDU also was in government, and he was Angela Merkel's finance minister. So again, it is something that you could say would have a big impact, but in real terms, Germans today don't seem to care that much.
Yeah, it's I think, incredibly interesting. Maria, thanks very much. We'll come back to you in a little while. Maria Tadeo covering the election for us. Speaking of, Jürgen Trittin joins us now. Former federal minister for the environment under Chancellor Gerhard Schroeder. In his capacity as minister, he was responsible for the decision to abandon the use of nuclear power by 2020. Currently, Trittin is a Green MP, also serving as deputy member on the committee on the affairs of the European Union. And I think it's fair to say just a massive figure for the Green Party in this country. Thanks so much for joining us, Jürgen. Let me first ask you about this raid. I was just talking to Maria about, you have decades of experience in German government. If a U.S. prosecutor raided the Department of Justice, especially a week before an election, there would be an uproar. Why does no one seem to care that a prosecutor in this country raided, physically sent people to go into the finance ministry and justice ministries of the federal government and take stuff?
I think I'm astonished too, but the reality is this is not something really new to Olaf Scholz, because at the time as mayor of Hamburg, he donated more than 47 million tax debts to a private bank that gained money from the fraud from the Cum-Ex business, and he was blamed not to overview the problems with the Wirecard scandal, and for a long time there are allegations that the Financial Intelligence Unit is not working hard enough on money laundering, and there has been contacts between the finance minister and the Financial Intelligence Unit, and that was the background for the raid. So Attorney General in Lower Saxony, you have to act.
All right, so you think there's smoke there. This isn't just someone with a political axe to grind jumping in a week before a federal election to... No. All right, let me move on to let me move on to the possibility of coalitions here, because this is where, you know, it's going to get interesting. Regardless of who wins, the Greens have gained so much power in the last months and years. Would you not consider a black-green coalition? Would you not consider working together with the Conservatives in government? Because, you know, before the SPD started to come on so strong, that was what all the talk was about.
Well, this is a campaign that will last for, again, 7 days. We had some interesting moments in this campaign, and we don't know what the result will be. If I look on the figures you show on the screen, the simple answer is if that comes true, there will be only 3-party coalitions possible. And in this case, we will have intensive and, from my view, open-ended negotiations. And I'm convinced that we will not have a new German government before December.
So, Mr. Trittin, can you give us an idea? First of all, do you think the Greens will definitely be on the cusp of government? And do you have any red lines?
Well, if I understand Armin Laschet and Olaf Scholz correctly, they are not hostile to the idea of going on together in a form of grand coalition. And for sure, this is a possibility, and this is the only 2-party possibility, and it depends on the result of the Green Party, whether it is impossible to organize, again, a black and red majority. That is what we are fighting for. The second thing is, yes, we are willing to negotiate with everyone, and there will be one key issue from our side. That's the climate crisis.
But specifically what? So is it quotas on pollution? Is it, how can you basically put things in place that are good for the environment whilst at the same time making sure that business is on side?
We are talking about a whole transition of the whole industry in Germany. It is not on the environment. It is also how do we organize steel mills? Will they use hydrogen in future or going on with carbon? Is the question, how do we organize the heating of the buildings? Do we still depend on fossil imported energies, or do we go away by heating pumps and solar panels? And this is the whole thing, and there will be huge opportunities for new jobs. Look at the time we created the renewable energy law. In the best times, there has been 400,000 new jobs. The policy of 16 years of Merkel, 12 years under participation of the Social Democrats, had put a brake on the development of renewables in Germany. This brake must be put away. And this is one of the key conditions for any form of government participation for the Greens.
Yeah, I was a bit surprised, Jürgen, down in Munich last week, talking to the CEOs of the biggest German car makers, of all the German car makers, actually. And many of them said, Herbert D. specifically, we need politicians to raise the price of diesel. We need a much bigger carbon tax. And this isn't something you typically hear from automaker CEOs. Do you agree that these two moves need to be done in order to make Germany a little bit greener?
There are strange new coalitions. The Greens have new allies. The car drivers' lobby, ADAC, is now in favor for limiting the speed on Germany's Autobahn. The CEO of Volkswagen is going on the same position as we did since a decade. Stop the subsidizing of diesel. Otherwise, clean technologies, and that means battery-driven electrical vehicles, we don't have a chance for that. They are open to new technical standards. We want to phase out all combustion engines on the vehicle level up to 2030. BMW, Volkswagen, Daimler are in favor to do it earlier than 2030. So what we see is that industry is far ahead of our competing parties, the Conservatives and the Social Democrats as well.
Thank you so much for your time today, Jürgen Trittin from the Greens in Germany. And of course, the election just 6 days away. Coming up, the dream of owning a home is increasingly out of reach. We'll discuss how soaring housing prices are affecting governments across the globe. That's coming up next, and this is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua and Danny Berger in London. All very expensive places to live. Actually, even Berlin is becoming a very expensive place to live. It's a phenomenon given wings by the pandemic, soaring housing prices, forcing people across the globe to give up dreams of home ownership and forcing governments to deal with the consequences or be thrown out of office. Bloomberg International government reporter Alan Crawford joins us now with his big take story, which is fantastic. It's something I've been thinking about for months and months now, but you've noticed, because I'm looking for a house, but you've noticed it in the halls of power, evicting some people and toppling governments.
Absolutely. I mean, we're seeing it particularly here in Berlin. We're seeing demonstrations against, these are rent price increases, but also actual home prices are going through the roof. We've seen something like 45 straight quarters of price increases here, which is unprecedented across Germany.
45 straight quarters of price increases.
In the US, it's even more dramatic, and it's happening not just in the traditional hotspots of San Francisco, New York. It's right across. I saw something like 28% price increases of buying a single-family home in Boise, Idaho, in the first quarter of this year compared to the year before. It's across the board.
Wow. Alan, I mean, it's pretty crazy, and this is a case in London, Paris, Rome, and you're also mentioning Idaho. Does it, you know, if you look at supply and demand, does it actually change, or do prices keep on rising?
Well, what we've seen is, as a result of the pandemic, then prices are reaching fresh records. It's because of ultra-low interest rates, just the sheer fact that not many homes are being built. But we're seeing it also right across the world. And that it's not just about the simple numbers, it's also a generational issue, because statistically, baby boomers are far more likely to own their own homes, and so millennials and Gen Z are the ones that are being left behind.
Yeah. Alan, I think Matt wants me to go in and defend Idaho, but instead of that, I'm going to ask a political question. Yeah, go ahead, Matt. Go ahead.
I don't think that people from outside of the U.S. maybe understand how cool Idaho is. I mean, it's a pretty awesome place to live. You think of just the potatoes, but there's also a pretty amazing ski culture there, and it's kind of like the Wild West in a way. So Boise isn't, you know, a lame place to live.
Bridgeport, Connecticut was another place with almost 30%.
Okay, I wouldn't want to live there, yeah. Fair enough.
Well, I guess it's been shown how cool it is because housing prices are going up. Alan, quickly here, what has kind of been the common thread among politicians' responses to these higher prices?
There's no real single thread that politicians are scrambling about to look for any kind of solutions, so that we're seeing examples of attempts to introduce caps on rent. We're seeing big moves in the Canadian election to ban foreign buyers from coming in to buy up apartments and stoke the prices. Even in Ireland, there's an attempt by the main opposition party to force banks to limit the amount of interest that they charge on mortgages, so that the politicians they're scrambling for solutions, but there isn't really any sustainable fix, and the result of all of that is really political uncertainty.
So what does it mean for, you know, the existing housing debt, Alan?
Well, actually, Bloomberg Economics has done a lot of work on this, and they're pointing out the obvious, if you like, that if there's any increase in interest rates, then a whole cohorts of society are going to be at risk here. So that, of course, brings all sorts of other, you know, political uncertainties, not least economic and financial uncertainties.
Alan, thanks so much. Alan Crawford there with today's big take on house prices and rent. This is Bloomberg.
From New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Francine Lacqua beside me in London. Matt Miller is in Berlin. Now, Bill Gates has raised more than $1 billion in corporate funding for his breakthrough energy catalyst program. Gates is drawing on BlackRock's Larry Fink and other CEOs to rally support for some of the world's most demanding clean energy projects. Bill Gates discussed the initiative exclusively with Bloomberg's Eric Schatzker.
If government was doing it by itself, you wouldn't have the breadth of expertise you need. So our expertise, the company's expertise with the governments, are taking a lot of recovery money. Europe, has committed a lot of capital. The Congress is debating substantial money in the two different bills there that, if those go through, will allow this effort to go full speed.
Bill Gates there speaking exclusively with Bloomberg's Eric Schatzker. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us now. Tom wants to talk about the markets. Tom, I want to talk about tennis.
Here we go.
You were number 3, the third dinner guest.
I was not number 1. I was
that
number 3.
The young star that won the U.S. Open chose you. I mean, I knew this all along, and I don't know whether you even play tennis.
Well, I played years ago, actually, and I had an immense influence on young Emma's game. There's no question about that. The hockey coach, the tennis coach said, Francine, don't give up the day job, is what they said.
Okay. Well, Tom, you're always top of my list for dinner. What's on your chart today?
What's on my chart today is to get beyond tennis and get to the markets. And this is getting serious. There's some correlations here, Francine, that really add up. I want to show a foundational correlation. This is just one piece. I'm not linking in the short-term trust market, the liquidity market, into what we're seeing in Hong Kong and in China. But the fact is the overnight repo market broke out to new highs in the last couple of days, well out over 1.2 trillion. Maybe it's a tough correlation there, Francine, but I'll take it as a tea leaf along the way.
I will take it as a tea leaf. Tom Keene, our superstar icon, co-anchor of Bloomberg Surveillance. Now, there's quite a lot going on today, and Danny, you're basically watching markets.
Yeah, it's a dramatic day, a lot of that having to do with contagion fears, but specifically S&P 500 futures breaking below their 50-day moving average. Typically, you see dip buyers step in at this point, just in terms of the technical level. Will we see the cash market open below that resistance band? And Matt, will people buy it?
Yeah, definitely got to watch. We just saw the stock 600, for example, fall to losses of more than 2%. I'm watching these French defense talks and what Macron is going to do. Is he going to injure NATO because of Biden's move to go behind the French back and make a deal with Australia? This is Bloomberg.
China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
The financial markets are telling the reverse of this spring, which is re-acceleration in the fourth quarter.
Sure, the consumer is really robust, but there are also issues affecting consumer demand.
It's a lull before the storm, before the Fed in particular needs to act and do something.
This is the perfect time for him to announce tapering because things are so quiet.
The Fed's response function is likely to move in a more dovish direction next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Hello, China, from New York City. For our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures this Monday morning, we're down 62. We're negative 1.4% on the S&P 500. Tom Keene, Evergrande, front and center.
Yeah, and the contagion is tangible, and what I would really notice is the word comprehensive. John, this is a comprehensive price adjustment on a Monday morning in New York. You can go any number of ways here, but John, I'm simply going to go the 20 miles or so as you move from Shenzhen down to Hong Kong. And when you see Henderson Development and the other traditional Hong Kong developers begin to see their share price erode, that gets your attention.
Starting to bleed into global markets as well, Tom. Treasury yields down 3 on 10s. We're down 4 basis points on 30s. TK, from your perspective right now, from all your reading, are we facing financial risk here through markets, or are we facing real economic risk, real economy risk?
The answer is we don't know, but what we do have is an agenda here, and it stretches from the Fed meeting on Wednesday out to this new debt ceiling debate. That heats up. I know we'll speak about it a number of times here through the morning. It's a set of things, John, and you get that out of September into Q4, that rush to the end of the year and the mystery about 2022.
The mystery for me this morning, Tom, and Lisa, please weigh in on this. This has been on the radar for a long time. Yet here we are this morning, finally waking up to all of this with futures down 1.4%.
The key is the regulatory impulse, the regulatory response in China. Why have they not stepped in more meaningfully? The fact that they haven't, and I'm talking about Chinese regulators, Chinese officials, is actually setting a lot of concerns. There's a report this morning in Reuters talking about the potential for an additional regulatory crackdown on the property sector once we're past the Evergrande hiccups.
Not past that just yet, though, are we?
No.
We've got a key week to get through.
Exactly.
Let's be clear about that. Equity futures to kick things off this Monday morning. Good morning to you all. We are lower. We're negative on the S&P. We're down 62, negative 1.4%. Couple of key things to watch this week, Tom. Some interest on bank loans due today from Evergrande. We've had a strong guide from authorities priorities that they probably won't get paid. Then on to Thursday, Tom, where some interest on bonds comes due as well. So it's a key week, Tom, for Evergrande risk. And you see it in the bond market too, in China. And in treasuries, risk off, defensive, yields lower 3 basis points.
Look at the VIX. We're halfway to crisis. I mean, crisis is a general benchmark, John, is a 30 VIX handle, and we're at a 25.46. Again, this is a comprehensive pullback rather than a narrow Evergrande story.
Bit of dollar strength out there as well. Euro dollar just on the brink of breaking 117, Lisa. Euro dollar this morning, 117.09, negative there, a little more than 0.1%.
I'm amazed that we haven't even mentioned the Federal Reserve yet, which really shows how much people are focused on China, considering the fact that we might get some sort of guideline as to when the Fed will start tapering their bond purchases starting on Wednesday. Today, traffic is snarled once again. Some people will be actually excited to see this. The UN General Assembly is kicking off a week-long gathering in New York City. Joe Biden, Boris Johnson, Jair Bolsonaro, all of the leaders that are coming, not necessarily the 10,000 people person in event that's going to be happening. However, still notable, and they'll be talking about some of the pressures on the economy. 10 a.m., we get the NAHB Housing Market Index. Interesting to see the sentiment and how much this factors into how the Fed looks at the market. Sentiment actually has fallen to about a 13-month low. It's expected to stay there due to some of the supply constraints that we have seen ongoing. And today, energy companies and the UK government holding a third day of crisis talks, really talking about the fact that natural gas, gas prices in general have basically tripled over the past year. John, I know you've been talking about this and focusing on this, but what it highlights to me is the idiosyncratic aspects that the Federal Reserve will be looking at to determine whether this inflationary push is transitory, and then what this does to consumer sentiment at a time when prices, basic prices, are increasing so much.
John, something here is so important.
Go on,
How does this Fed act given this market this morning? You got to be kidding me. They are miles from tapering.
Oh, TK, the basic argument goes like this. The Fed won't announce tapering because you're not expecting the Fed to announce tapering. That's it. The Federal Reserve is in do no harm mode, and I think that's it. Most people expecting an evolution in the language used to sort of tee up tapering further down the road. But this week, can you imagine? Can you imagine, Tom, with this on a screen right now?
No, it's not going to happen.
I don't think so.
You know, we still got to get to Wednesday.
It is the volatility that Laurie Calvasina has been waiting for. The RBC Capital Markets head of U.S. equity strategy joins us right now. Laurie, is this it? Is this the setup, the beginning of it at least, that you've been waiting for?
I think it very well could be, John. I mean, you know, looking at the futures this morning, this is the first time in quite some time that we've had a real meaningful break. And I think if you talk to investors, the fear is starting to become palpable. And ultimately, we really do need to see a break in institutional investor sentiment and positioning to get this pause that ultimately refreshes. Look, we've been talking a long time about this. You know, we've talked a lot about the deceleration in the rate of change in S&P earnings growth time and time again coming out of a recession. It typically leads to a pretty meaningful pullback in the stock market. It is natural for this kind of pullback to happen, and we've got a lot of other catalysts besides slowing earnings growth that are starting to perk up to help catalyze that downward move. So, look, I am actually somewhat hopeful that we can just go ahead and get this done and get this out of the way and then move on. I never want to see a down market, but I do think that this is just a natural part of the process when you come out of a recession, that you have to have this digestion period.
What is the overbought nature of the market right now of institutions? What's the character of their confidence?
I think that it is a hope that some of the pressures we have on the market and earnings growth in particular on the inflation side, the supply chain side, that those will be resolved sooner rather than later. I think there is also the idea that we are heading into a strong economy again next year. I think at the end of the day, investors have to ask themselves, what's the risk of a recession? It really is that simple. Is it yes? Is it no? If the answer is no, you are typically better off sitting around waiting and buying the dip. It's really only when a true recession fear builds in that institutions will take that positioning down and move to a more defensive posture.
Laurie, when do we know that it's the dip to buy?
I think that we've got to watch the sentiment indicators very closely, Lisa. And, you know, we actually had one take a very good step in the right direction last week, which is if you look at the AAII retail investor survey that comes out every week, the net bullishness dipped to about minus 17%. So we saw bears pick up pretty quickly, and we also saw the bulls just absolutely collapse. Now, that's 1 week of data. We really need to see that hold for 4 weeks on the 4-week average, but typically when you get below 10%, minus 10% on the 4-week average, that's a very good buy signal for the market on a 3 and 12-month forward basis. Now, that's just one side of the sentiment puzzle. You also have to look at what institutions are doing, and the CFTC data, which we get weekly, is showing us that we're still sitting around all-time highs. If you look at S&P 500 contracts, if you look at aggregated S&P or broader U.S. equity market futures positioning. So we need to see that institutional positioning come down, and we probably need to see a little bit more damage on the retail side for a few more weeks.
Laurie, your call, 4,500 year-end, 4,900 year-end next year. Where does Fed policy fit into this? Lisa, Tom bringing that up this morning. Wednesday could be interesting given what we're seeing on the screen this morning. What's the Fed call that goes into that 4,900 next year?
So the Fed call really impacts two things, is one, our assumptions on multiples, and second, our how we want to be positioned for the broader U.S. equity market. Look, I think a lot of the damage to the market itself, John, was done back in the spring when you saw all the economists around the street clamor for the Fed to start sending those tapering signals. And back then we saw small caps really start to underperform large caps. We've also seen the value trade take a pretty big hit if you look at 2Q performance. That is important because if you look back at the last tapering episode, we saw markets actually ultimately continue to climb, but the risk trade took a hit. So value underperformed and small cap underperformed. That's I think, one issue. But the other issue, frankly, is that if you look at the Fed balance sheet, it's really enabled multiple expansions in the post-financial crisis era. So if you take the balance sheet expansion away, you don't get any more multiple expansion. That's really going to be earnings growth driven market going forward.
You know, Laura, I'm in a complete sweat here this morning with futures where they are now. We're on the SPX of 4.1% drawdown. I mean, a crisis is at hand. The VIX isn't even out to 30. We're out to 25.14. When I decide to load the boat, which sector has the most combination of persistency and velocity into 2022?
So I'll say the two sectors that I'm going to be telling people to buy this week are going to be financials and technology. You've got a big pillar of the value trade, big pillar of the growth trade. I think as we come out of these, sort of shorter term concerns on the market, I think the value trade will do well again. And I think the financials trade, it's cheap. It doesn't have supply chain issues that things like industrials have. That's going to be your cleanest, purest way to play that value pop. But longer term, what we do know about the Fed, and so let's move away from tapering and start talking about hikes. But typically the Fed hiking cycle does end up killing the value trade as well. We see that time and time again. And I think longer term, when we start to see economic growth decelerate back towards kind of trend-like levels, you want to be in the growth trade, and tech is probably your best way to play that.
Laurie, thank you. Good to catch up, as always. Laurie Cavasina, RBC Capital Markets Head of U.S. Equity Strategy. If you're just tuning in this morning, good morning. Not such a good morning if you're long this market. We are a little bit softer. We're negative 58 on the S&P. We're negative 1.3%. There is a bid into the bond market, quite defensive. Treasury yields come in 2 or 3 basis points to 133.28. That's the market setup. We're going to stay on top of this through the morning on Bloomberg TV and on Bloomberg Radio. But let's take a second. Saturday evening, I'm minding my own business. I'm about to go out to dinner, and ping, I get a message. I get a message about the US Open winner, Emma Raducanu, and I start watching this interview with her. And she is asked to name her 3 dream dinner guests. Take a listen to what the US Open winner had to say.
This is your fault, right?
I would say Daniel Ricciardo, Michael Jordan, and the third would probably be Tom Keene from Bloomberg. I think because I did my A-levels in economics, I was having to keep up to speed with all the latest news, and he made it in a way using analogies that were relatable and actually quite funny and very understandable.
So I already knew that Emma watched Bloomberg Surveillance, and Emma, if you're watching this morning, good morning. I didn't know we were doing favorites, and I have to say I'm disappointed. And Tom, the other issue I have here, she understands you.
Well, no, I don't know about that.
Emma Raducanu needs this seat.
I am reading in on tennis like nobody.
Yeah, I'm sure you are. I bet you are.
John, what I could do with a Slazenger challenge, my hockey coach said, go talk to the tennis coach, and the tennis coach said, don't give up the day job.
Tom, you're a legend, and of course, Ms. Raducanu is very, very welcome on this program whenever she's available. Equity futures this morning down 59 on the S&P 500. Futures come in 1.35%. We kick off the trading week. It is risk off with China front and center going into the Fed decision. Full coverage this Wednesday. From New York, this is Bloomberg.
With the First World News, I'm Rishka Gupta. Treasury Secretary Janet Yellen is warning of a catastrophe if Congress doesn't raise or suspend the U.S. debt ceiling. In the Wall Street Journal, Yellen wrote that the government could run out of money to pay its bills sometime in October. Senate Minority Leader Mitch McConnell has rejected appeals to Republicans to join with Democrats in boosting the debt limit. President Emmanuel Macron is making it clear that France is still angry over that submarine deal. Australia cancelled a $66 billion agreement with a French company in favor of a new defense pact with the US and the UK. Macron will speak with President Biden in the coming days, and French officials have been renewing Macron's calls for Europe to boost its own defense capabilities. In Canada, Prime Minister Justin Trudeau appears set to retain power in a close election today, but he may fall short of regaining the majority in Parliament that he wants. Projections based on national polling averages show that Trudeau's Liberal Party is likely to win 155 of the 338 seats in the House of Commons. The opposition Conservatives are likely to win 119 seats. And it was a night for the streaming industry at the US Emmy Awards. Apple TV Plus won Best Comedy Series for Ted Lasso, and Netflix's The Crown won Best Drama Series. The first time the streaming business leader has won the top prize. Netflix won more awards than any network. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Rishka Gupta. This is Bloomberg.